Just seeing here for DuPont, they expect adjusted EPS of 105 in Q2 against expected 114, with net sales of Q2 seen at 3.2 versus expected 3.28 billion. So next up in 10 minutes time, the bottom of our the latest US labour market report, whereby headline non-farm payrolls that's expected at 130,000, with a range at the low end of 25,000 to a high end of 195,000. The previous was 228,000. The unemployment rate that's expected to hold steady at 4.2%. And then in terms of the order of play, I'll then cover any revision to the headline. For the earnings components, month-on-month for April, that's expected to remain at 0.3%, year-over-year seen rising to 3.9% from 3.8%. Then for work week hours, they're expected to hold steady at 34.2. Labour force participation rate, that was previously at 62.5%. I'll then cover the private, the manufacturing and government breakdown, the 2-month revision and the birth-death adjustment. But just to put today's release in a bit more context, it's the labour market report will be gauged to see whether the implementation of tariffs has started to take effect, with the reciprocal tariffs being implemented from April 2nd, with the reduced rates announced from April 9th. In Powell's recent remarks, has continued to toe the line that the Fed is well positioned to wait for greater clarity before considering altering its policy stance, sticking to its wait-and-see approach. Other influential officials, such as Governor Waller, have lent dovish, while there's also significant pressure from US President Trump for the Fed to lower rates, as he continues to stress the Fed is moving too slowly. Heading into the jobs report, there have been some contrasting forces in play for April, as the soft and hard data continue to paint a different picture. Whilst business and household economic expectations have plunged recently, the available labour market indicators are not showing any sudden break in the labour market, albeit the latest ADP report was weak. In addition, JP Morgan adds that the weather may have boosted employment in March, but should be a drag in April. Market pricing currently sees around about a 6% chance of a cut in June, with a cut not fully priced until July, and a total of around 89 basis points of easing is seen by year end.
Good morning, traders. We got NFP coming up pretty soon here, just in a second, about 7 minutes. Not a whole lot's expected today. It's actually very small. If that music is too annoying, let me know, I'll deal with it. So right here you can see non-farm payrolls coming up. Expectations are very minimal. 130K jobs expected to be put on, 228K last month. Got 6 minutes, 15 seconds. We launched the chart. Not much doing here. Let me kill this music, or at least turn it way down. And I will kill that as we get going. Yeah, not much expected here. But it is expected to be lower, so the current trades that I currently have on. We got Bitcoin trade on. That's not Bitcoin, sorry. That is micro futures on the gold contract. Looking for gold to go back lower. Might be early on this. Obviously, if we get, it doesn't even really matter what we get. If we get a big blowout reading on jobs, like really high number, 250s, I don't expect that. But if that were to happen, then I would expect gold to come up a little bit longer, a little bit more. But you can clearly see my entry is just right above here. Price has been steadily climbing at the VWAP, has been holding intraday support. And then over here, we have Bitcoin. We are long and strong. We bottom ticked this wick yesterday, or the day before yesterday, sorry, at 10 a.m. when we got the news. We bought Bitcoin, we bought the S&P, and we shorted gold. All three of those trades worked out perfectly. Still holding a small portion of, you can see down there in the right-hand corner, margin. A little less than $500 worth of margin being on this trade. We got $2,900 of capital we can reapply if we need to. Let me go over here to this chart. This is the gold chart. This is not the futures chart. I don't have active futures data or up-to-date data on TradingView. I already pay like $700 a year for TradingView. I'm not going to pay a monthly for a data feed that I have two other platforms that have live data. I got live data on Thinkorswim, and I got live data on the platform I'm currently short on. So why would I pay TradingView extra money for live data? Right there is live data. That is live. But this is what I like to chart with. It just feels better. I'd say the user interface on TradingView is just more prone for charting. But what we're looking at here is we broke down, this is the wrong chart. So we broke, let me shut this guy up. I don't want to shut him up. I want to listen to him when the NFP comes across. We got 3 minutes. We got last week's low right here, and this is going to be your daily support zone. This is a very, very bullish chart. Make no mistake about it. On the daily, you're still well above the 50 here. You didn't break down below the 50 yesterday, so this could literally hold support here today. I don't want you shorting gold if you don't have any idea what your risk metrics should be. Please do not short it. I can afford to get stopped out multiple times on this account. So make sure gold moves 10 cents per tick, not points, cents. 10 cents is a tick on gold. If you get a couple point move on gold, that's going to be a big stop. And we do have non-farm payrolls coming out in 2 minutes. I am popping in and out on chat, so if you have any questions, you can drop them in there anytime you want. Just having some coffee.
So it's warming now on the US non-farm payrolls report. Again, the headline that's expected at 130,000. I'll then move on to the unemployment rate, which is expected to hold steady at 4.2%. We'll then cover any revision to the headline. I'll then run through the earnings components and the labour force participation rates. I'll cover the private, manufacturing and government breakdown, the 2-month revision and the birth death adjustment.
So the reason that we're shorting gold isn't because we're bearish on gold. We're shorting gold because we're expecting gold to pull back and Bitcoin to go up, risk to go up. We got a nice breakout on Bitcoin yesterday, but you can see Bitcoin is struggling at its anchored intraday VWAP. This is just anchored at the open.
10 seconds.
10 seconds, 5 seconds.
177,000. It's 177,000 above the expected 130. Unemployment rate that holds steady at 4.2% as expected. Earnings month to month 0.2% below expected 0.3. Year over year 3.8 below expected 3.9. And then the work week hours 34.3 above expected 34.2. Participation that rises to 62.6 from 62.5. Private, that was 167, above expected 125. Manufacturing, -1, above expected -5. Government, that was 10,000, against a previously revised 15,000. Just go over the bones of that report. So that was non-farm payrolls 177, above expected of 130. Prior, that was revised lower though to 185. So potentially a bit of an offsetting factor
So we got
there.
a good
Then
hit.
the unemployment rate that was 4.2% as
177.
expected. Earnings a touch lighter than expected. In terms of the market reaction, we've seen immediate upside in equities and downside in treasuries, and an appreciation of the dollar. So markets taking this as good news thus far. But again, do bear in mind there was a bit of an offsetting revision there. And for the 2-month net revision, that was minus 58,000. Birth death forecast 393,000. That's a sizable jump from the prior of minus 33,000.
Thank you, boss. You've done your job. You can go back to sheep now. Now, obviously, the market opens at 9:30. We're a little bit early. So anything that happens here can obviously be sold off, right? Or, I mean, in risk terms. But we're getting that move on gold. This is a micro contract, but you can see even on a small account like this, I mean, that's $100 of open P&L there. Not bad. And that's with it all the way back up to here, right? Down here, that would have been a potential $200 trade. So we'll give it a second here, see what it wants to do. It was a beat. We got, let me put you back over here. We got a beat on non-farm payrolls. We were expecting 130K. We got 177K. There was a revision on last month's. Last month's, the number was 225. They revised that down to 185. And the unemployment rate came in as expected at 4.2%. We have 4.2% last month as well. Everything come in as expected, I guess. So that's currently why we're just seeing a minimal spike here. Go look at the S&P 500. You're getting a decent little spike there. I don't have a position on the S&P futures right now, because I do like the breakout on the S&P. But you can see yesterday we traded all the way up into the top edge of the expected move. We didn't quite get there. This is a big level here on the S&P. You can see if I pull this chart in here, all the way from back over here on July's high, July 2024's high, that area acted as clear resistance right in here. Right in here, then it came down. Resistance acted as support when coming back from above. That held when we initially had the start of what ended up being a very quick bear market on the S&P 500. You can see that this level came back into play here as the markets were selling off. Beautiful test of old support, and it held, and you ended up trading up. This is a big level of resistance. This is why I'm not necessarily looking to get long on the S&Ps. What I'm expecting here on the S&Ps is a liquidity run above yesterday's high, and then I want to see that rejection. This is July's high. We go into the monthly chart. Let me see. No, it's not. That's September. Yeah, right there. All right, perfect. So this is that same level on kind of the futures, if you will. I'd like to see a run above that, or at least a test of it, and then a rejection. And if we could get that, then I could potentially look for a short. But nonetheless, just a run above yesterday's high and a rejection could potentially be a short just because of where we are, what day it is, and all that. If we go back up to the Bitcoin, you can see that it is literally selling off. So maybe this is going to be a bullish day at the open. I don't know. You got S&Ps coming off. Let me go to charts. Let's see what we got over there. So we have ES futures on the top here. This is going to be your 5-minute time frame, your ES dailies down here. Notice how you've had multiple days of upside here on the S&P 500 coming into that area of resistance. Here's Bitcoin futures on the CME. On all other exchanges that I'm aware of, we are well above the yearly opening range. I have no clue why the yearly opening range is so high on the CME on this platform. If I look at CME futures on TradingView, it's much lower than this. We've already broken out of the yearly opening range, but you can clearly see here CME futures testing yearly opening range on this platform. We got the advanced decline line over here at bottom right, and then top right is going to be NASDAQ futures. It's up. There's your NASDAQ 5-minute. So futures looking good. I don't know why Bitcoin is coming off. Don't know, don't care. When you're a trader, it doesn't matter which direction price wants to go, right? Would I call it bad for Bitcoin? Not necessarily. Not necessarily. We just broke out yesterday on Bitcoin. We'll go back to the Bitcoin chart. So we just broke out yesterday. We just broke out yesterday. And we're clearly bullish. I mean, we hit overbought for the first time this year back here. So yesterday was the first time we've actually gotten any bullish continuation from this overbought test. Now, I don't look to short Bitcoin because it's overbought. I can tell you that right now. Bitcoin can just continue to move higher and higher into that overbought territory. And if you look at your weekly chart here, you're not even back into the extremely bullish territory on the RSI. The RSI is a momentum oscillator. It is, in my opinion, the best momentum oscillator. And we consider anything above 60 to be extremely bullish. We're testing that now, but we're not closing above it. Bitcoin doesn't close yet. It's got 2 more days. It's got today, tomorrow, and Sunday. And we'll see if we're able to get above this and close above it. If we do, then I would take that as more bullish. However, one could arguably say, maybe, just maybe, you're running out of steam here. But you are clearly getting upside continuation from last week's close, and that is typically what you want to look for. So in a scenario like that, you typically do want to be a buyer at support, right? Typically, not always, but typically. So this right here could just be a simple test of demand. I mean, it's a news test. This is what happens when you get newsprints, even if it isn't a big newsprint or a massive expectation. But the jobs number is good. Jobs are holding up. Unemployment level is stable. Pretty much everything is stable. The only thing that isn't stable is the White House. Clearly. Last time Trump was president, it was just as volatile as it is now. So, I mean, obviously the market doesn't like to hear tariff talk or speak on tariffs. This is Friday's swing high. No, it is not. This is resistance. I don't know what that is. Why is that there? Why are you there, bro? Oh, I think I remember. This is coming from old weekly open from back here. Is it a very important week? No, it's not. It was an all-time high week at that point, but the next week you took that high out. I see no relevance as to why that weekly open is holding as resistance, but you can go intraday and look. It clearly is holding as resistance. This is yesterday. So clearly there's resistance coming in here for whatever reason. But back up there, the position's still doing good. It would take quite a bit for us to get stopped out of this. But I would also like to deploy more capital. I've taken $927 worth of realized gains off of this trade. We're sitting with 417 unrealized gains. The position size is just too small. I could just close it and potentially reopen a brand new short or a brand new long. It's really hard for me to be a buyer on a Friday at the high of week. You're trading at the highs of week. You're not completely making fresh new highs, but you are at the highs. That's a bullish candle and you're close to the highs. Right? Bullish candle, close to the highs. That's your weekly range. That's very, very hard to buy all the way up here, knowing that there's big level of resistance overhead on risk, big level of resistance overhead on Bitcoin. A little bit difficult to be a buyer, wouldn't you say? But I don't necessarily want to be a seller either. But we can see that gold is actually having a reaction that suggests we might ought to be a seller. I was actually assuming gold would run this swing high, even though it ran this swing high, and even though this swing high ran this swing high. How many liquidations do you need, right, before you actually roll over? I would say any rollover that happens before 9:30 a.m. Eastern Standard Time, which is what time the U.S. stock market opens, probably ain't going to be the daily high. It could be, but it probably won't be. All right, we still got almost an hour. It's not quite an hour. It's 50 minutes until we get the New York session open. I'm more than willing to eat a stop here and then potentially look to enter a short at a little bit higher. But if I eat a short on this, then that makes me want to get short on Bitcoin. But every time I enter a fresh Bitcoin trade, I pay fees. So I am very selective unless I use a limit order. If I use a limit order because I'm a VIP level 6 on the week's exchange. So if I use a limit order, if I'm a maker instead of a taker, then I pay very little fees. But I most of the time enter my trades with taker status because, let's be honest, I want to get filled when I want to get filled. And I never, ever use limit orders to get out of a trade for a stop loss or a take profit. It is always market order. This exchange does a little bit not so great on fills, on limit orders to get out of a position. The limit order fills work perfectly to get into a position, but they kind of fail to get out of a position, especially if the VIX becomes volatile. And you can see right here on the VIX, we are literally filling a gap right now as we speak, a downside gap. Now there's an upside gap on this all the way back up to 36. Anything over 15 is an elevated VIX. We're at 2281. So even though volatility has consistently and steadily been coming off, it is still very much elevated. But we could get a gap fill down here today and then bounce. I would call this gap filled in my opinion, but that's just my opinion. If you don't think that gap is filled, you can throw a line up here for a gap also. And to be honest with you, this much of that gap is filled. right? Because generally gaps come where you close the previous day to where you open the very next day. So at one point, this was a very wide gap. This is about a midpoint check of that gap. So technically, I have seen midpoint checks of gaps hold for the market. In other words, if you just fill half of the gap, sometimes the marketplace will decide that is a good enough gap fill and move on. And we do know that there are professional vol sellers out there. This is why whenever we get an elevation in volatility, I generally want to be a buyer on risk, a buyer on Bitcoin, not a seller. Everybody was screaming bear market, bear market, bear market, and you barely touched bear market territory on risk and bounced. That is not a bear market. That is the exact opposite, in fact, of a bear market. I do have bear market territory on this chart. It's right here. You were there for 2 whole days. 1, 2. That was it. Now, this is a very big area. Like I said, very big area of resistance. If we go get our all-time high and we fib from the all-time high to this low, which would be your yearly range, you're right at the 618 Fibonacci retracement of the yearly range. So if the bears truly believe that the macro fundamental outlook is extremely bearish, they will be selling here for sure, right? So I need to see the bears show back up, and I need to see them show back up in large fashion for me to change my bias from bullish to bearish. When you're in a bull market, you will make much more money if you just be a bull than you will if you are always a bear in a bull market. I promise you, that is not a lie. I'm not keeping you from anything. That is my honest opinion. If you are buying markets in a bull market, you will make more money than selling tops in a bull market or trying to sell tops in a bull market. We did not get stopped out of our gold short just yet. We're actually back into, well, I wouldn't call it great territory. I'm actually looking for this to potentially go back down to yesterday's close. And that would be a magnificent trade. A magnificent trade. I'm expecting too much, to be honest with you. We go over here and look where yesterday's close is. That's all the way down here. I'm expecting an entire retracement of today's range. This would be your open. But this is my profit target on gold. It says 32.38 there, but if we go back over here, it's not 32.38. Let me change this to a daily. Where's my line? I don't really do much charting on this. Basically, I just watch TradingView, and whatever it's doing, that's what I do over here on this, all right? I could get the exact price. The exact price that close is going to be 32.2220. So 32.22. There we go. Boom. So that's what I'm looking for intraday here on gold. Doesn't mean I would get it. It's just what I am looking for. And now we're back under the intraday VWAP. This is fantastic. I understand when I turn my head over to that monitor, my voice might fade away from the microphone. It's just because of my desk, the way it's set up. So yeah, that's a big move, dude. Expecting this is crazy. But I'm only short one contract. So for me, it's really either make this or don't make anything at all, because I had a really, really, really good week. A really good week. We literally top ticked gold, bottom ticked S&P, and bottom ticked Bitcoin all on Wednesday at 10 o'clock. So we did really good. So today is just, I was like, why not just go live and see if we can help answer some questions, that kind of stuff. We were doing good on our speed. We can go check that real quick. Look to be doing okay over there. Upload speed should be doing okay, so maybe I can raise the bit rate. But nobody is complaining about the stream's connection, so we don't have to move it. If you have any questions, drop them down in the chat. Bitcoin is crying. There is rejection. Bitcoin pumper dump. What is the target for Bitcoin now? My Bitcoin target is just higher. Like, I don't have a Bitcoin target. If you want my intraday analysis or my daily analysis, we're bullish. We've been bullish on Bitcoin ever since we started closing dailies above the 21 exponential moving average. Right? This bullish candle right here is what is called an exhaustion candle. This is a 10% move in one day. That is usually when the sellers have removed all their short positions. Plus you have FOMO buying taking place because you were down under the 200 exponential moving average, the 200 simple moving averages. Usually good places to be a buyer. We got this exhaustion candle here, and we wanted to be bullish 2 days later, and we've been bullish ever since. And I see no reason for that to stop. Now, does that mean you can't get red days? Of course not. Does that mean today won't reverse and take out yesterday's open? Of course not. I don't know what's going to happen, but if the sellers are still here in this marketplace, they better show me something like that, and they better show it to me pretty damn soon. Otherwise, more people are going to start buying this. Be an optimist, not a pessimist. Being a perma bear in a market that generally goes up, not the best strategies. Can you make money as a bear? Of course. Of course. Bears were completely in charge of price all the way back in January when Bitcoin made its final all-time high. January the 20th. Every swing high from then could have been sold into, but we were above the yearly opening range. So I did a video on the YouTube channel where I discussed how we looked in 2022 versus how we look now, because we got a similar price action here in 2022, and I was bearish, but I was bearish for a reason. The bull market cycle was over. The Fed was hiking interest rates. The whole macro scenario was bearish. We had the Fed hiking interest rates because of high inflation. We got PCE data on Wednesday that was below expectations. In other words, inflation is going down. The Fed is in a cutting regime right now, not a hiking cycle. They are cutting. The only bearish thing that you have out there is Trump tariffs. That's it. That's the one thing that caused the markets to take a dump. If Trump puts that under wrap, this market slowly goes back up to highs. That is my analysis. That is why I wanted to see a consolidation above the yearly opening range, and then I wanted to see this trade away. Now, yesterday looked really, really good to that end. It did start to trade away, but today, not looking great to that end. So with that, I'll go back over here to 2022. It was one of the best shorts in my trading career. Literally shorted this thing from here down to 26K. So I exited the short here. And that was a levered up short. Boom. But we have the same scenario here, right? We've seen a break above the yearly opening range. We've seen consolidation. Well, this day it was back under, but by and large here, you are consolidating at, let's just say at. But then we got this day here. So this day and then the following day told us we no longer want to be bullish on Bitcoin. This is a severe breakaway from the yearly opening range. We have all bearish macroeconomical reasons to be bearish right now. Fed is cutting or hiking rates. We have high inflation. Yeah, we wanted to be bearish here. We don't have any of that now. So we expect the exact opposite. But, well, we don't expect it. We position ourselves for it and we manage our risk in and around that. And if it happens, it happens. If it doesn't, okay, it's fine. I cannot lose money on the trade. The trade that I am currently in on Bitcoin, I cannot lose money on it, as I have already taken the money off. I've already paid myself. I still have unrealized gains on the trade. This was at 10 o'clock when we got the PCE data. The PCE data came in under expectations. Lower inflation. We just had a CPI print. Was the lowest CPI print in the last 4 years. Not high inflation. We can look at other things also to see if the market is literally positioning themselves for high inflation, right? Right over here. We can go into this. So if I pull this out, this is what inflationary fears look like. This chart accelerates to the upside when investors have expectations of high inflation. This is what it looks like right here. We are doing exactly the opposite. No, investors are not positioning themselves for high inflation. And we can go back to the bonds real fast and I can show you the CPI. There's your inflation rate right here. The Fed is looking for a 2% target. You are closer to reaching that or achieving that objective. 2024's open here. You closed out the year lower. 2025 open here. You are much lower. Inflation is literally going down. Now, that doesn't mean you're going to see that in eggs and meat and stuff like that. That's not how inflation works. Not in America, anyway. Once you get high inflation, prices go up across the board and they don't go back down. They never go back down. They they raise with inflation and then they stay. That's how it works here. It does suck. I hate it. I do not like going to the grocery store, dropping $350 for 4 bags of groceries. I'm with you guys. Trust me. I don't like it either. But that's just how it works. Ever since I've been alive in this country and I've lived here my entire life, born, raised here, everything has just been getting more expensive, more expensive. The older I get, the more expensive everything else gets. I remember putting gas in my car when I could first be a driver, like when I was 18 years old, when I was driving cars way back in the boomer days, Gen X days, all right? I was paying 99 cents a gallon, and I was bitching then about how expensive gas was. We haven't seen 99 cent a gallon gas in 20 years. You will not see 99 cent a gallon gas. Well, maybe, I don't know, if oil keeps going down, maybe. Oil was a good trade also that I missed. And I failed to tell you guys about it because I just didn't see it until it was too late. Like, I'm not chasing this move to the downside here. But once again, Yearly opening range, you're bullish, you set yearly high, you come down, set fresh yearly low, then you break that low, get downside continuation, you accumulate at a monthly support. This is your dead cat bounce right back up into the yearly opening range. Should have been a seller there. Boom. And this is a big thing right now going on oil. You haven't broke this monthly support in over, well, October 2021 was when you put that support in. And that support held all the way up until last month. We just opened a fresh monthly candle yesterday. So all in all, we're positioned pretty good. I wouldn't be looking for a dump. I honestly think that we'll see, right? It's still too early for me to say, yeah, the lows are in on Bitcoin, but I will say it. I think they are. You clearly have a 3-drive bottoming formation here, just like you had a 3-drive topping formation here. But you won't know until price trades away from it. Price has done more than a better job of trading away from it. We have multiple levels here. Let's clean the chart up. You can see last month we put in a bullish engulfing. Clearly, I would have liked to seen that close above the previous month's high, but it's still an engulfing. An engulfing candle's definition is you take out the previous month's high and low. If you do that, you have an engulfing regardless where it closes. If it closes up, it's a bullish engulfing. If it closes red, it's a bearish engulfing. This is a bullish engulfing monthly candle at a key level of support. That is a buy, right? Always, until you get told otherwise. Where is my drawing tool? What's going on here? Give me a sec. There you are. Why are you hiding? Where are you hiding? There you are. All right. Perfect. This is a key level of old resistance turned to support. I mean, this is a pullback at best and a very bullish reaction. Now, it is early in the month, and I used to say a lot that, the weekly highs and lows are usually put in on Tuesday. Monthly highs and lows usually put in during the first 2 weeks of the month. If you're trading up, is it going to be setting the monthly high? I don't know. I know the weekly stuff doesn't work anymore. I went back tested the last 2 years. The weekly high or low coming in on Tuesday only happens 23.2% of the time. So that's not more often than not. That's less often than not. So I don't have the exact statistics on if the high or low of month is put in early, but generally speaking, we look for that to happen. So clearly I would much rather have seen the monthly open and we head lower, say around this month low right here would have been a fantastic place to look for potential support and then start to move up. But we may still get that. Remember, Bitcoin is about doing one thing, and it's about, or all markets is about doing one thing. That one thing is generating liquidity. Let's shrink this a little bit here. Generating liquidity. This is liquidity, right? If we shrink this chart out, you can see how there was a ton of liquidity up here. Price went up there for it. You're not building up much liquidity down here. I mean, it is a lot, but it's not white hot. You see how this metric is white hot right there? The whiter it gets or the hotter it gets, the more liquidity buildup you have. But we could run into this thin liquidity zone, which the dark area stands. That's what it is. It's a thin liquidity zone. We could run up into the top edge here, like right in this point, and roll over and trade lower for the next several days. But if the bears are in charge of price, if the bears are in control of this market, then I need to see that. I need to see that, and I need to see it in a big way for me to become bearish again. Like, we would have to almost engulf yesterday's range and close back down here for me to be like, okay, something wrong. Something wrong with the world today. I don't know what it is. Yeah, that's the only way. That's the only way we start to freak out. Here's a test of resistance. You still have not taken out yesterday. Yeah, that's today's high. Yesterday's high is here. This is the current daily high right now. We pull up our volume, session range volume, session volume profile. We look at session volume. We don't care about volume by time. For me, it does nothing to help me analyze price when I'm looking at volume by time. Nothing. I want to see volume at price. This is price. This is showing me where the majority of the volume is traded today. The majority of the volume right now, this is called the point of control. It is setting at roughly $97,000. If price trades away from this to the upside, then I can say with a little bit of confidence that the buyers are in fact winning. But if we do take out today's current high, which is here, and yesterday's high, and reject and start to trend lower on the day, I'm still just in pullback mode. Like, we've been going up for one day only on Bitcoin. So it would give me a little bit of pause. I honestly thought we were going to see, if we beat on NFP today, bullish continuation. And what I'm currently seeing over here looks good, right? That's my Bitcoin long. Over here's my gold short. That looks good. That looks really good for upside continuation on Bitcoin. We're at $248 on a micro contract. I mean, damn. So if this continues to go down, I probably will close this trade and then look for a retest of the volume weighted average price, the VWAP, because that's a good trade. That's a good trade. I'm only in it with one contract. This is too volatile on a smaller account to put on more than one contract. So let's just go ahead and buy to close this and look for re-entry at the open. I got nowhere else to be. This is what I do every day. So if you want to stick around, I'll stick around with you to the open. No, I don't want to close it like that, dude. Yeah. No, go back to grid. All right, I'm trying to close the stop loss. Let's just buy to close here at 32.50. Well, we got 32.49. I'm okay with that. And then we'll look for another short entry once we get the New York session open, and if we could trade up and hold at the VWAP. That is all I do intraday. If I pull up my Thinkorswim, I do the same thing on the ES futures. This is an intraday VWAP. This purple dotted line down here is a monthly VWAP. So these bands are lower and upper volume weighted average price bands. They're volatility bands. The reason they have closed is because I keep this on a monthly time frame. This shows me, this is a daily chart, but it shows me where the volume weighted average price is of the monthly range. And generally, here's your 21 exponential moving average. So if we're trading above the VWAP on a daily closing basis, above the monthly VWAP, then I go to up here and I look for retests of the intraday VWAP. I give it a little bit of time to see if we break through it or whatever, and then I put on risk. I generally look to risk 4 to 5 points to make 10 on the ES. I do not trade the NQ. It is too volatile for that size of a position. But if you are trading the NQ, if you can withstand the volatility, then you generally want to be looking for a 50-point move. So that means your stop loss should be 25 points, right? It's very easy to get a 50-point move in this asset. This asset moves roughly 200, 300 points a day. So if you can't scalp out 50 points, you're in the wrong direction. But that's all I do every day. Every day I come to my office. My office is my next bedroom in my house, and I trade the markets. Bitcoin, risk on, gold. I trade stocks, options. I trade everything. But the majority of my money is made in Bitcoin because it's very volatile. And with the Weeks platform, I don't have to trade on CME. CMEs is, you got to have a pretty sizable account to trade Bitcoin futures on the CME. And it holds a lot of margin, and I don't like to risk that much. When I'm using Weeks, I can manage how much risk I want to risk whenever, right? I used to have a rule. I would never have more than $10,000 on exchange. I had to bump that up because, well, I just had to bump it up. So now I go to 20,000. Right now the account's setting at about 14 grand or 12 grand, somewhere in between there. So when I'm risking about $150 to $250 on a given day, and then I just pull that, it's settled in Tether. This is Bitcoin versus USDT. So that's unrealized profit here is of Tether. All I do is I transfer that Tether to my Coinbase account and I pay myself weekly. That's how I make a living. So that's what we're doing. And I don't see any reason to up the risk more than I'm already at. I can make $1,000 a day if I'm right every day. I'm not right every day, and I don't average $1,000 a day. I'm just saying that is what's possible. I mean, $5,000 a week it's just me and my girl does us just fine. So I don't need to risk $50,000 or $100,000 on every trade. I'm not trying to buy an island. If you are trying to buy an island, then good luck to you. All right. A lot of people risk more than I do. I understand. That's what my job is. I'm a risk manager. I manage my own book, my own risk, and I like to be very, very clear on what I'm risking across all markets. And I'm trying to cut this open and I can't do it, but I have a knife right here. All right. Are you related to CryptoFace? No. I'm not related to any YouTuber that I know of. Nope. You're not the first person that's made that, though, that comparison. But no, I'm not related to him. I don't do this as much as I used to do. I used to be live all the time, but I've had internet problems and whatnot. My internet's fine now. So whatever updates they made at the beginning of the new year is great. I probably could go live almost every single day. It's just, I think the last time I went live, I didn't get a lot of people show up. A couple people showed up, but if you guys want me to go live more often, I will. I mean, not many people are clamoring for live streams. So I generally do one upload every week. Just basically give you an idea of what I'm thinking, what I'm looking for, and that's pretty much it. But if you want more live streams, I can live stream all day long. I won't, but I could. I will live stream up until about 10:30, 11, 12 o'clock, tops, max. Because after 12, the volume dries up, the move's already happened. I mean, the market's not even open yet, so we're a little bit early here. We are getting a little bit of a rejection on a 5-minute time frame, but you gotta widen your horizons. This is not a very big move. Volatility is still elevated, so Bitcoin is still moving over $1,000 per daily range. So this 97.3 down to 96.8, that's a $500 move. If you can risk $250 to make $500, you will do okay on Bitcoin. But with leverage and the way it works on offshore crypto exchanges, you're not going to be able to make enough money versus the amount of fees you're going to pay. So like if you come in this trade with 50x leverage, you would need Bitcoin to drop down to here before you're even in break even territory in most cases. You know what I mean? Unless you're trading with very light leverage. If you're trading with very light leverage, then you might be able to scalp out $500 moves on Bitcoin. It just depends on how big your position sizing is. But that's also going to make your fee structure different. I have my fees pretty much adjusted at about a $2,000 size position. So I'm not risking $2,000, but I'm using $2,000 of capital to enter a trade. And generally you can, if you get on a good hit, like if you get in a day real close to the low of the day and you say you buy Bitcoin, you can make $1,000 because I'm using 20x leverage. Right? So you don't need as big of a move, but the fee is terrible. See, like I can jump into a long right here on a market order for you, and there's $2,900 of available margin. So I'll use half of that, a little bit more than half of that. We're going to jump into a position long with $1,000 right here. And over here, you can see that's $25 it costed me to get long. It will also cost me $25 on exit. So that's $50 right there I've already lost, regardless of what Bitcoin does. Regardless if Bitcoin goes up or down, I've already lost $50. But you can see it doesn't need to move much before you're... So I would need this to be up like $50 in the green, and that would be a break-even trade. Right? This is where a lot of newbies or a lot of newer traders get confused. They don't realize that they're paying a substantial amount of money for fees just to trade. So they see, I got $150 in my exchange. I put on a trade. I lose 1%, but then I'm down 5%. They're stealing money from me. No, you're down 5% because you're trading max position size and they're tearing you up in fees. Now, if you want to use weeks, they do pretty good on fees, and depending on how big of a position size you use will determine on what you are as far as a VIP to them. If you're trading well over $1 million worth of volume a month like I am, then you'll get a higher VIP status and your fees will be less, but not non-existent, just less. I'm a VIP 6. So a normal person with a VIP status of 0 could take that exact same position size, $1,500 position size. You're going to pay $60 one way. Now you're going to pay $120 in fees just in and out. So you better make sure you calculate that risk at $120 to whatever, and that would be your actual risk. See, I'm down 1%. And I'm actually down more than that. I'm actually down 3% right now based on the fee structure. These are things that you have to learn on your own, essentially. You have to see what it costs. I can't tell you what it's going to cost you. Your fee structure will be different than mine. But if you do want to use weeks, there is a link in the description. Please do not put more money on exchange than you can afford to lose. If you can't afford to lose $500, do not put $500 on exchange. Put $100 on exchange. trade with a very small portion of money. It's about learning a process. It's not about getting rich. No one's getting rich on a $500 account. No one is. But if you can do that, you can learn the process. You can learn to do this. And eventually, you don't need, even if you have a very crappy job and you don't need a lot of money. If you can put together a 1.5 to 2 years of profitability, you don't even have to do that anymore. Prop firms will give you money now. Like, you pay them, they'll let you trade on their prop. That's how you make money as a trader. You trade other people's money, or if you have a lot of money, if you're blessed in life, you trade your own money. I trade my own money. I don't need prop money. I don't want prop money because I want all the profits, not just half. If I'm going to do all the work, I want all the money. I'm stingy. But there's just a quick overview on trading and fees and stuff like that. Good afternoon, Heath and Company. Been a long time. It has, Michelle. Welcome back. It has been a long time. Glad, or I hope everything is going great for you. That's why it is better to have cash flow than capital gains. I can't argue with that. When alt season, I don't know. I don't need to trade a lot of alts. I trade the ES futures. I trade a lot of products already. Adding alts to the mix, I will. Like if it's a weekend and there's an alt moving, I will jump in and out for a quick scalp here and there. But generally, I don't invest in altcoins. That is literally the most risky asset class on the planet to invest money in. But we can go look at Bitcoin dominance if you want. I mean, I don't know how much I'm going to be able to tell you, but I do have a Bitcoin dominance chart. That ain't it. Give me a second. It's been so long since I've looked at a Bitcoin dominance chart. I'm not even sure where it is. That's the Futs. That's a BLX. That's Bitcoin. There's dominance. Bitcoin dominance looks good. So alt season when? I would say not anytime soon, unless this tops out. And here's the thing. This isn't a tradable asset. So I literally can't look at this chart and tell you if it's going to pull back or not. Can you use areas of resistance and support? In my opinion, no, because it's not a tradable asset. If it was a tradable asset, then of course your objective price levels would matter, but it's not a tradable asset. So I can tell you that you're above an old monthly resistance level here at 63.95%. I don't know how useful that's going to be for determining whether or not alt season is around the corner or not. I honestly believe since the ETFs have come back or have come in now, that gives Americans, people that invest in their 401ks and stuff like that through work, gives them the ability to invest in the Bitcoin space through their 401ks. So Bitcoin dominance is going to be, in my opinion, in the future, much stronger. It's going to be more difficult to determine alt season than it used to be. Used to be, it was every 4-year market cycle on Bitcoin, back when the halving mattered, right? Does the halving still matter? It probably does. But like I said, now that you have that constant week on buying pressure that you get in the risk markets, on the S&P 500, on the NASDAQ, that's why they generally only trend up, because all of the employees in the world, in America, are constantly on a weekly basis adding to this, right? So it drifts higher. That's why it makes more sense to me to be a perma bull almost. I'm not perma bull. I will short any asset to zero. I don't care about them, but they trend up. Bitcoin will probably do this too, now that people can get exposure through ETFs. With alts, it's a much smaller niche, if you will. So unfortunately, I'm not a big crypto guy. I'm a big Bitcoin guy, right? And I will trade Ethereum and things like that, I consider Ethereum to be an altcoin. I know it's blasphemy in the crypto space, but I'm being serious. I mean, this thing has been very bearish all year long. All year. Been very bearish. Much more bearish than Bitcoin. I mean, the second month, February was a dump. You didn't make all-time highs on Ethereum in 2025. You did on Bitcoin. You were not even close to making all-time highs on Ethereum. So this tells me right here that Ethereum is just inherently more weak than Bitcoin is. That's the reason why we were looking to short gold, not because it's in a bull market and I'm trying to pick the top. It's just I can look at the gold chart. I'm glad I took profits, by the way. This thing is all the way back up. I can look at the gold chart and see that when Bitcoin started to come off, Bitcoin came off right in here, guys. Right? Jan 20th. That's when Bitcoin made its all-time high and rolled over and started making lower highs and lower lows. Gold did the exact opposite. Gold started printing higher highs and higher lows. So that instantly told me that everybody that took profits on Bitcoin, they are rolling that capital into gold. So in order for me to see continuation to the upside on Bitcoin, I must see gold come off a little bit. I don't need to see it back down to 2025 yearly opening range. I'm not saying that. But it did need to come off a little bit because we need those buyers from somewhere. All the people that sold Bitcoin through here, we need them to come back to make this go up. And we could clearly see that these people that sold here went here. They just rotated the capital. That generally happens almost every bear market. One asset class will do much better than all others. That's where capital flies to. It flies right to that asset class. So that's why I was looking for the gold short. If we can get some profit taking at least on gold, then that would potentially help put a bid under Bitcoin. We got the market opening in 4 minutes. I've been saying for a while now to expect a bounce along the way, but the top is in. You're just a perma bear, Buster G. You know it. I know it. Everybody knows it. You have no technical or fundamental stance to say that. There is literally no... I mean, if you're going to tell me the top is in on Bitcoin, at least explain why. Don't just say the top is in. When you say that to people like me, actual traders, we can see ignorance in that statement. Nobody knows if the top is in or not, especially not retail investors. But if you have a good reasoning for that statement, I would love to hear it. Love to hear it. But you never say that. You just always say trolley type of stuff like, oh, the top is in. Their bear market bounce. You're not even in a bear market. Not on the S&P. This down here, bear market. Up here, not bear market. You're not even below the daily 21 EMA anymore. Though you did have that going for you. Not anymore. Not only are you not below the 21 EMA, it is literally propping price up. So I have to beg to differ with you. But once again, this is the yearly range from high to low. This is the 618 retracement. If the sellers are here, if you're right and the top is in, they should be coming in here pretty soon. This is a key level of resistance. July's high, right? So they should be coming in here. Now, we did get the move that I was looking for, so one could arguably look to take a short on the ES futures right now. But you're not bearish, you're bullish. The bulls have control of the momentum. The bulls have control of the EMAs. The bulls have control of all momentum indicators and oscillators. You have to have a reason, a macro reason to be bearish. If it's just tariffs, then you're being pessimistic. You have a more pessimist view than an optimistic view. And that's not enough to say the top is in. You literally need gold to fly back to all-time highs. You literally need to see this start to roll over pretty soon, or the bearish case is going to start to go away. The more time that the S&P 500 spins above bear market territory, the more investors will come running to put that capital back to work. Laith, any thoughts on SPY getting rejected at the 200-day SMA EMA? What do you mean? Getting rejected. Let me go find the SPY. I didn't know. I don't ever look at the SPY. I don't trade the SPY. I trade the ES and the S&P cash market, which is just the SPX. But I can look at both the EMA and simples. Yeah, I mean, this does look like an area of resistance. But we've already determined that July's high is also going to be a key area of resistance. That this is where you want to look to take a short trade if you honestly believe that this is done, that the bear market is coming back. You did open up with a gap here, so you could absolutely fill the gap. Your 200 exponential is under current price. Your 200 simple is above current price. And this is just the 100, and nobody gives a crap about the 100. I can't remember the last time I can remember seeing anybody care about the 100 exponential. I'm not saying you're going to make one dime on that short, though. I don't know what price is ever going to do. I can show you how to manage your risk, but I cannot tell you what price is going to do. Gold did get back above the intraday VWAP. Let's go take a look at it. That's not gold. This is gold. We can see a little bit of trade action coming back in here on the open. This is what we want to see. We want to see gold continue to trade off, show us some downside continuation, and we could potentially take a short entry at 32.65. We'll sell to open 32.65. We'll see if we can get a fill up there. And then if we do get a fill, we've already made a lot of money. I generally look to make about $75 a day on this small account. We've already made $250, so we're up very good. We can afford to take one more shot at this. I don't want to buy it down here because that would be like a $75 wide stop. I don't want to give back my gains. But we'll see if we get filled here. You will hear it if I do get filled. But you can see the SPY's back to bullish on the day. It's going to take a little while. There is a strategy that you could do here because you know where your resistance level is. You're watching July's swing high of 2024. You could do an opening range breakout scenario. And basically what you want to do is you want to wait for your first 3 5-minute candles to open and close. Or just look at a 15-minute chart. And when this bad boy closes, wherever it closes, that will be your opening range. Then you will look for a 5-minute close under or above that range. And that would be your directional bias for the day. On the daily time frame, all indicators are suggesting bullish for the daily range expansions, but we have already had a bullish weekly range expansion here. So by looking for a final bullish expansion day on this is like asking for a lot, if you will, right? It's asking for quite a bit, in my opinion. You missed out on this. This is what you should have been capturing. All of this, not today, right? That's what I'm trying to teach people. I want people to stop taking so many trades. If they could just look, you're at the very top of the option market expected move. This is what's called the market maker's expected move. Generally, people will sell calls above that, and they will sell puts below this. All the people that are looking to capitalize on premium selling on a weekly basis. So if you get above this like you did last week, then you're going to see potential upside based on a short squeeze. But you could get a rejection like this also today. You got that rejection yesterday, and you're trading above yesterday's high. So anybody that got short yesterday, they are stuck right now. That could also fuel more upside on the day. But we have to wait. The day is very early. We need at least to get an opening range on this to give us at least a little bit of an idea. Now, something I want to say here about that opening range strategy, that opening range breakout strategy, it did not work yesterday. This was your opening range. There was your opening range high. Here was your opening range low. You got to close above it. So as soon as everybody went long, it literally reversed in everybody's face, went back, closed on the bottom edge of the opening range. So now the bears jump in, and then look what happens. See, the market generally looks to hurt the most amount of people as possible. There's not going to be any strategy in the world that will give you a 100% hit rate. But the opening range strategy is a legit strategy. If you're going to see upside continuation based on shorts yesterday being stuck, because we know that we did wick up into that or close to it yesterday, you're above that. If you're going to see an opening range breakout with bullish continuation, then wait for that first 15 minutes. Just be patient. Wait for that first 15 minutes. See what happens at the 20-minute mark. See if you get chop or see if you get upside continuation, right? All right, Buster G, not a perma-bear, Heath. I've explained why the market top was in. It's due to the longer frame charts. Okay, can I just say something? You haven't explained to me, first and foremost. And secondly, I think I do pretty good at analyzing every single time frame. You can see that I have a 12-month candle chart here. That's as high as time frame as you can go, right? That's a yearly candle. And that's how I analyze each and every year. I break it down where we are inside the year, inside of last year. That gives me my biases. That gives me my strategy. So I know how to analyze higher time frame charts. I just got filled on the gold short, but I want to finish reading Buster G's chart. The three-week MACD already crossed bearish. All right, let's pull that up. I'm assuming you mean on Bitcoin. So let's go to a 3-week chart. That's a very weird chart interval, if you will. I don't know anybody that looks at a 3-week chart, but hey, I will look at a 3-week chart with you. We will have to go get a MACD. We don't have one. Let me refresh this. All right, so Bitcoin. Oh, let me close that position up there. I did not want to hold that long open way up there, but all right. So we've gotten the refresh on, so we should be able to get into this 3-week MACD. A MACD, for anybody that doesn't know, is just another momentum oscillator. And it's not as good, in my opinion, as the other one. So your 3-week MACD is about to cross back to the bullish side. Your momentum is back to bullish. You're ignoring that. Why are you ignoring that? There's 9 days left on the close of this candle. So to be fair, you've got until next week, which I specifically said in my video last week, that if we break down and close not this week, but next week, back under the yearly opening range, then I will probably go back to having a bearish bias. So that's about the right time frame. That doesn't mean the top is in, though. You know what I'm saying? You're going on an indicator, and an indicator is calculated by the close of this candle, not the open. So you got to wait for the close of this candle to get your next print on this. It did flash bearish for a very brief amount of time. Is it going to make a lower high and roll over? It is possible. But for that, you need to kind of look at the macro fundamentals to see, oh, that's not good, to see if there's even a reason to be bearish in the first place. So tariffs are a reason to be bearish, for sure. If he wants to keep putting them on and taking them off, any uncertainty in the market will cause selling pressure, right? And Bitcoin is the riskiest of all asset classes. When it comes to the big asset classes, it is a very riskier asset class. So we'll see. But if the top isn't in, I mean, hopefully then you will have learned that you can't look at an indicator and be able to say the top is in, right? Because the way I look at this RSI, we never got even back close to the 50. This is a reset. This is a pullback, the way I see it. But that's what makes a market. We both see things differently. I thought you had a macro reason of being bearish. I didn't know it was purely based on one technical indicator. But to everyone, everyone they can analyze the way they want to analyze. If you're profitable in your trading, I have a saying, if it ain't broke, don't fix it. You know what I'm saying? If you're making money, keep doing it, bro. That's all I'm trying to do, is help people actually make money. That's what I want to see. I like to see the comments when people tell me, you have changed my life. Those are the good comments. The NASDAQ is showing the same MACD bearish cross, longer time frames. Same thing happened when it... Well, I mean, if you're going to look at the 3-week MACD, you might as well just look at the monthly candle. What does it say on the monthly? You don't have a bearish cross yet. So it looks like you're cherry picking. No, the 2-week MACD says your top is in also. I'd say your weekly MACD says your top is in also. It does, but you're losing bearish momentum. See, we need a higher bullish close to break back above bullish on the MACD. This is why I like the RSI better. It's just better. It's a more snappy average. It helps you get on the right side of the markets quicker, in my opinion. That's also the reason why I don't have a moving average on my RSI, because one of these is just a moving average. That's what you're getting your cross from. The gold short has been triggered, initiated, and is on its way. I am going to put a stop just above this 5-minute wick here at 3268, spot 80. Let's just type it in. And then we can go up 4 more ticks. 3268, spot 80. Wait. That's 3266. My bad. I don't want to risk that many points. Is it spot 80 though? Yeah, spot 80. We want to buy to close 3266, spot 80. That way we took our shot. That's all we can do as risk managers. We can take our shot. We can analyze the charts. We can think what we want. But in reality, none of us know what's going to happen. It's just when you've been doing it for as long as I've been doing it, you get better at identifying the best times and places to put on that risk. In my opinion, that's all technical analysis can do for us. That is it. It can only show us where we want to put on risk and when we want to put that risk on. We are under the intraday VWAP. Once again, that is the intraday VWAP. The center line is your VWAP, and then your outer lines are just your volatility bands. This is a one standard deviation move to both the upside or the downside. So generally, if you're scalping this out, you can see how small my risk margin is here. This would be a profitable trade to take profits at the one standard deviation move lower, right? I mean, I'm already in profits, and it's well over a 2-to-1 risk to reward at this point. But this is a very fast time frame. This thing can stop me out in 2 seconds flat. But we've already made money on the non-farm payroll print. Decent money. We can hold it for a bottom one standard deviation test or get stopped out. Either or, we're good with that. So if you hear another bong, that means I got stopped out. But yeah, like I said, if you're making money, Buster, if it ain't broke, don't fix it. But just stop saying stupid stuff like the top is in or the bottom is in, because nobody knows. No indicator in the world will know that. Is it a possibility? Yeah, that's it. It's a possibility. It's not looking good for the bears, I can say that much. I mean, that's a beautiful resistance turn to support test. And you've gotten 4 straight bullish weeks from those lows. Is this a dead cat bounce? That's essentially what Buster G is saying, that this is a dead cat bounce. So if you are going to short it, I think you should try it here. And then the very last place that I would even look for a short would be here. Up here, the 786. So you can short the 618 of the yearly retracement or the 786. That gives you 2 areas to look to put on risk. If I thought for sure that this is going to just go over now, because you have liquidated basically all of the top side leverage you need to liquidate. In a sense, this is not a monthly swing high, and this is a liquidation point in itself, right? So technically, price does not need to liquidate that. Plus, where are we in relationship to the month? We are just above March's high. Here is May's open. There is May's open. And where's April's open? Down here. So you got March open here. April's open here. May's open way up here. That's a bullish signal also. But we could trade back down, liquidate this bottom edge of liquidity down here, and then become bullish again. If you think that's going to happen, I've already told you this is a good spot to look for shorts. I don't know if you will make money on the short, but it is a decent spot. If you're going to see the bear market continue, this is where I would put on my risk, and then I would try it one more time up here, and then I would be done trying to short this market. We are at the bottom edge of the one standard deviation move on gold, so we can close this trade out, or we can hold it and hope for more money and be stingy and greedy and all of the bad things that traders generally should not ever do. We already made money today. We can move our stop here just above the close of the last 5-minute candle. So now we cannot lose money on this trade at all, right? That is managing risk. And that is a very effective way of doing so. So if you are trying to become a trader, these are the things that you should be doing to manage your risk. Make sure you're making money, not losing it. It's all about making money, not giving it back to the market, not giving it to people like me. So like every time you lose a trade, you can hate me for it. I took your money. I took your money. And that sucks, but that's the way markets work. I mean, you have your buyers, you have your sellers. Bitcoin struggling here at resistance, struggling to get anything going. Another thing I like to do also is I like to try to keep an eye on where that 930 candle is, that open. Even though Bitcoin trades 24/7, that tells me where the New York session started. Because if we're trading above this point, I probably don't want to be a short. Especially if on the daily, monthly, weekly, yearly time frame, you're bullish, right? You're bullish right now on pretty much every time frame. You're bullish on your yearly candle. Here's your yearly candle. You are bullish on the year. We know that because the open is here. You are bullish on the 6 month. You're bullish on the quarter. You are above resistance on the quarter also. That needs to be spoken of. You're above your resistance on the quarter chart. Your highest quarter close of all time. You're above that. On the monthly, you're barely bullish this month. But last month, you were super bullish. But you're not above the highest monthly close of all time yet, which is way up there. I could literally see Bitcoin rolling over today. Will it? I don't know. But I could see it happening. Now, on all time frames, we are bullish. We are even bullish on the daily and weekly time frames as well. They're bullish across all time frames. And you're inside yesterday's range. This is an inside day candle. We have not taken out yesterday's high. Even though we're trading above yesterday's close, we're still inside of yesterday's range. That's the reason I would kind of want to see yesterday's high get liquidated. And then I would want to see rejection before I would ever enter a short on this. And we can look at that on the hourly time frame. We can watch that on the 30-minute, 15-minute, 5-minute, whatever. Let's go look at our opening range breakout. See if we're getting any signal there. We haven't. So here's your first 5-minute candle. There's your second 5-minute candle. So if you close this 5-minute candle under this candle's close, then you will have an opening range breakdown. But that does not mean you will see downside continuation. It just means you have an opening range break strategy signal to look for a short. But I don't trade this strategy. This is not one of mine. This is strategy. You'll see opening range breakout strategies for the London session, opening range breakout strategies for the New York session. I'm sure you'll even find videos of an opening range breakout strategy on the Asian sessions. In my opinion, the Asian session trade is always look for the fresh daily open, look for it to liquidate the previous day's high or low, and then see if it fades back into the range. If it does, take that side of the trade, throw your stop out at the low or high of day, see what happens. That's trading, baby. Managing money. Tesla and MSTR. Yeah, Tesla started to see a little bit of toppiness yesterday. Ultimately, it did roll over, and I was using Bookmap to show me those orders. I kind of did want to put in a session. So if one of you lovely members of mine, or one of just any of you, could timestamp right here, we'll go talk about that. Because what Bookmap does for some people, I see in the candles. That's what I am. I am a candlestick analyst. I analyze price at specific levels. And what you see in the candles, you can see on Bookmap. I don't own Bookmap. I guess Thinkorswim, it's owned by Charles Schwab now. They have a Bookmap. I just noticed it yesterday. It's $40 a month. So if you're not making money trading, I wouldn't do it. But we can pull it up. Give it a second. Uh-oh. Okay, well, maybe not. Maybe because I'm doing a live stream, it's like not happening. But maybe I'll do a video about it and put it out tomorrow. Okay, dude, I got you. Restart. Just do that. Do that then. But looking at Tesla, we can go here. I'll analyze it. So we're trading inside of a longer term range on Tesla. Just ignore this. These are all gaps that have never been filled on Tesla. This is why I don't generally look for gap fills, because gaps don't have to fill. But on a monthly chart here, you can see that you're trading inside of March's range. Now, April did break out below March's low, but it was a brief breakout. So you're trading basically inside of March's candle. So it's choppy. You're inside of a range. You will be inside of a range until you break out above March's high. That's how candlestick analysis works. Knowing that, I said yesterday, I was watching the intraday price action and it started to get a little toppy, meaning I was seeing a lot more sell pressure come in at the highs than I was seeing bids. So I essentially just posted that Tesla was looking a little bit choppy or toppy. So if you notice over here, let me get this off my screen. You can see how strong the bids were going up. All of these points here are going to be big areas of liquidations, right? That's where your liquidity sits. So this big bubble right here, even though it's green, it is the biggest volume traded on the day. What happened after that, right? Did you see more of this kind of price action? No, you did not. Actually, you saw the exact opposite. Literally, we were at the high of day, and I wrote intraday price action on Tesla starting to look a little bit heavy. Take profits. This is in regards to the longs. Oh, you can't even see that. So right here, intraday price action on Tesla looking a bit heavy. Take profits. This is for the longs. Like anybody that bought the open in the morning on Tesla over here yesterday, I was basically telling them to take profits because I was seeing this is heavy price action. And you can see how this candle right here was so much bigger. You had a liquidation above the swing high and you couldn't get anything going. And then you got this. So going back over here to the book map thing, we started to see a lot more selling coming in here than buying. So when we did get this final liquidation up here, I wanted to see more of this action to continue. And it didn't. We actually started to see a big block of selling coming in here after a big liquidation level. This was sell stops being triggered. That's why it's bid. It's a buy order. Whenever you're short the market, whenever you get filled, if you're short the market, you are a willing seller at a higher price. That's what you are. You are in the market with a short. You have a stop loss that is a higher buyer level. So you are literally asking, hey, I want to buy the market and I want to buy the market above the market. Of course, the market's going to fill your buy order up there, right? That's why you get this big block of bids. Now, in order for that buying pressure to continue, I would want to see more of this. But we didn't get that. We got the exact opposite. These are sellers soaking up these bids. So all of these bids were triggered and all of these people were selling into those bids. This is so big because you also had instantaneous sellers just instantly selling into this. But since there was just one or two or however many more bids than asks that took place here, you got the biggest volume of the day right there. Boom. And then the sellers took off. And then pretty much price took off to the downside after that. So hence the reason why I was telling people to sell up here. Do we see that same scenario playing out today? We kind of do. And we know that we're trading inside of March's range. So this would be the top edge of the range. You will get a lot of sell side pressure in the form of people selling calls. That is sell side pressure. It is sell side volume. It is shorts. People are literally selling call premium at resistance in a range. And they're looking for that to continue to break back down, back closer towards the midpoint of that range. So that's where all the sell pressure is coming from. In order for Tesla to break out here, it's gotta get up into here, and you gotta see buyers soak up all that sell side liquidity, which is buy orders. We got to see those willing buyers get filled, and then we need to see fresh new buyers come in on top of those willing buyers. Show us the demand. Is there demand for this stock? We're not seeing that right now. Right now we're seeing a little bit more sell pressure than buy pressure. So, I mean, technically this would be, because this is your highest closing daily candle, it is daily resistance. This is your ultimate daily res because it is the highest closing one, but you could move this to here, and this then becomes what? This is a supply candle. All right. So if you're unable to close any dailies back above 285.50, then that would suggest to me that there's just too much selling going on at the top of the range here from premium sellers, not necessarily new shorts jumping in on Tesla, but in a sense, by selling call premium up here, they are shorting Tesla. They're just not shorting shares. They're shorting time. They're selling time. They're not selling price. They think that the market will stay under this point for a certain amount of days to expiration. That's how they're basing their trades. I'm not exactly sure where Tesla's expected range would be for today. I don't get expected moves on all charts or on all stocks, but my boy might have posted in the Discord the expected move. When was that? That was on the 27th of April. So yeah, we should have an expected move up here. Let me see if I can open this in browser. Oh yeah, here we go. So we have, we need to just find Tesla right here. So there's our close. Expected move, 24.91. That would be from the close of last Friday. I don't know if this is the price high or not. The 24.91, we'll round up, we'll call it $25. So we need to go to Friday here to the close here. So we need to go up $25. And that puts your expected move high for this week all the way up here. So to be fair, Tesla's is like a very, very small weekly range. This could just be a pullback. If the bulls are soaking up support down here, February's low, it came in as support on Monday, April the 28th, and it came in as support again on Wednesday. So this is probably going to break out. If the bears are going to take over, they got a perfect opportunity to do so right now. But they're just not doing that. Not yet. That could mean that the bulls are soaking up those buys. it'll be very important to see if you can penetrate yesterday's close, at least on an intraday basis. So technically for the short on Tesla, I don't think I would want to get involved in Tesla on a short until we start closing 5-minute candles under 280.52. And then at best, you can only expect one more standard deviation of a move from that point. So your profit target on a Tesla short, once you're closing below this point, would be here. The profit target on Tesla, short entry 280.52, short target 275.51. I absolutely would not take this short on the first close below. So if you get a move down here and close below it, I would like to see a little bit of a deeper stab and then a retest. Then I would want to see this area hold. Then I could look to enter my short trade here. But the problem is where is your risk going to be? All the way up here? Then that's just going to be a 1-to-1 risk to reward. Maybe you could do it up to here. That way you have a 2-to-1 risk to reward, and your one standard deviation under this line would put entry at 280, profit target 275.50. And if you use options, you're going to have to factor in what you pay for the premium. Remember, the VIX is up. It is elevated, so you're going to be paying a lot more for those puts than I would. So this isn't a phenomenal trade setup on Tesla. So for now, I like Tesla much lower myself. I would like to see Tesla put in a fade here, come back down to April's open and reject here. Because then, in my opinion, you will pull in enough sell side liquidity, because the bears, they see any downside whatsoever, they're going to jump all over this. They're going to think the top is in. They're going to come in here, and that could provide enough liquidity to give us a retest here and then an expansion back up. And a bullish expansion from this would be huge. That would be more of a swing trade. But you could potentially target 320.07 if you can get in, if 263 access support, right? So that's my analysis on Tesla. If you're looking for a day trade scalp, you got to wait until you see that the bears can at least get it under yesterday's open. Because anybody that bought yesterday when you're under the open of yesterday will then be stuck. And that could cause more sell side pressure. All right. MSTR is obviously more bullish than everything else. Here's your yearly open on MSTR. Once again, you're testing a monthly swing high. That means you are still trading inside of January's candle. All right. That's not your all-time high, but this is your yearly high. I can't think of a more bullish asset, one that is making fresh yearly highs. I mean, what more can I say? Would I be a buyer at fresh yearly highs? Nope. I'm not a breakout trader. I would need a pullback to support and support on this, because it's such a volatile asset, could be all the way back down to here. If this is going to remain bullish, you will not get a retest all the way back down here. Usually higher buyers stay being buyers of the higher. I know that doesn't make any sense, but usually when markets get uber bullish, people are constantly buying the highs. You could potentially look for a support test at the 382, which would be January's close. This would be where I'd become very interested in being a buyer on MSTR. I can't buy fresh yearly highs. I just can't. All-time high is way up here at 544, but this is a fresh yearly high. That means you have set in your opening range for the year. Not only were the bears unsuccessful down here, they were so unsuccessful down here that MSTR's testing yearly range highs. Not bearish, the exact opposite. Bullish. Okay? Now, have I seen fresh yearly highs be made and then reversals? Yes, absolutely I have. You could liquidate the yearly high, which it appears you have done so. We have to stretch this chart out to see. Nope, there is white space. So now this brings into a question, are we just setting a double top to liquidate retail sellers? So, yeah, probably, right? Like if I was controlling the market, that's what I would do. I'd say let's get almost up to a fresh yearly high and then pull it in a little too early. And then we'll just run them out and we'll get them out in a week and a half, 3 weeks later. But if this did liquidate, then I would feel more strongly about that pullback. Since it hasn't liquidated that, it's hard for me to give you a price target or even a trade entry at this point, because this could be setting a trap. A liquidation trap. There's your yearly high. You did not take it out. But you are bullish, very bullish. You're just still trading inside January's range. Daily support, first daily support, 368.59. You can watch what happens if you get a retest of that. If you hold there, meaning you do not close any daily candles under this, then this could be the first area to be a buyer to then target 404.42. The 3-week Monday art across happened last cycle. Playing the charts, not just being a permanent. Got you. I understood you. Sorry I didn't say earlier where the top was in, but you remember my prior tweets. Yeah, I do remember you saying, why didn't I call the top? The reason is because I don't call tops and bottoms. That's not how I do things. I let people know what an asset is. It bullish or bearish? Because I know most traders, especially most new traders, have the utmost difficulty in just understanding what trend they're in. Like, I generally don't want to be a seller in an uptrending market. I want to be a buyer at support in an uptrending market. Objectively, Bitcoin, MicroStrategy are up on the year. Objectively, the S&P 500 is still bearish on the year, I think. Yeah, you're still bearish on the year, objectively, on the S&P. So the S&P could still roll over. So there's your yearly opening range on that, all the way up there. But in my opinion, I mean, that would be way too high. But anything can happen. You can get almost right back to the all-time high and roll back over and make new lows. It just depends on what this market, since there's so much uncertainty out there, this market is going to be, it is going to be moved on an intraday basis from news breaks. News will move this market from one day to the next. Right? It just depends on what Trump does with those tariffs. They're going to kick back in when? This month, next month? When that happens, then the market could get really bearish really quickly again. That's why I don't try to say the tops or the lows are in. I feel safe about assuming that the lows are in on Bitcoin, but that's just because I have more of a bullish bias because I own Bitcoin in a cold storage wallet. If I didn't own any Bitcoin and I was just a trader, a speculator on Bitcoin's prices, I wouldn't care if the lows were in or not. I wouldn't care at all. But since I do own it, I'm a little bit more biased to the upside. The most money, like the majority, you can make a lot of money in a bear market, for sure. The problem is you don't want to give those funds back in the bull market. Whatever money you made in the bear market, you want to hold on to that. You want to be able to identify when you're no longer in a bear market. That way you don't give all that money back to the market. It's too early to be able to say objectively the S&P 500 is bullish. It isn't. It is still bearish on the year. But we can fib the yearly range. We know that. We can fib the yearly high to the yearly low. And we know that this thing should be rolling over. If not here, then definitely here. If it doesn't roll over here, you're no longer bearish on the year. If it doesn't roll over here, not only are you no longer bearish on the year, you're a mere 4.5% off of the all-time highs. And I gotta say, I know the S&P 500 can make fresh all-time highs if it's only 4% off the all-time highs. And the same can be said for Bitcoin. Bitcoin had a 10% day on this day alone. Now, there was a really good headline break that caused that massive move. Trump came out and said you should buy, and 2 hours later he literally said why, right? We're going to pause the tariffs. Boom, 10% move. Right now, Bitcoin is only trading off 11% off the all-time high. You're just 2 good days like this. 2 big days of printing fresh all-time highs on Bitcoin. And I just don't want to see anybody that made a lot of money in this give it all back trying to short every single daily swing high. Because Bitcoin, objectively, the trend has changed back to bullish. Whether you use a trend line to give you that subjectiveness or an objective price point being the yearly opening range. Either way, even the trend line has been destroyed. So your bearish trend is gone. But if Bitcoin is trading back under this, your bearish trend is back on. Back on. It looks like it's going to be a choppy inside day. I mean, we're 30 minutes, 45 minutes from the open here, and we haven't gotten anything going on the intraday. The gold trade is still, it does look like the bulls did give it a shot, and it does look like the sellers are trying to win the day. So maybe there was something in that newsprint or the jobs number that they didn't like. The unemployment number steady at 4.2%. This could just be a choppy day like yesterday was. Yesterday was yesterday was a good expansion day, but I mean, once you got around 11 o'clock in the morning, it then became choppy for the rest of the day. We are definitely still trading inside of yesterday's range. So if you want to be short on Bitcoin right now would be a decent spot to take that short. You're retesting the New York session open, but your opening range breakout is like, you haven't even broken out. You broke out to the upside here. Then you went all the way down here. This is a very choppy session. Be very careful. Pretty sure I read that. If it were to make all-time, I wouldn't pay no mind to just one indicator or two. Got you. Curious why you changed your tone of voice when you read my comment. You give me shit. You're always bearish. That's all. I don't hate you. You know what I mean? You're part of the community. That's it. I just like to bust your balls. You like to bust mine. All right. You were busting my balls, telling me and everybody on my Twitter page how I missed the move. And I haven't missed anything. I consider that ball busting. If you can bust my balls, I can absolutely 100% dish it back, my friend. That's all. I can 100% dish it back. It's friendly banter is all, buddy. Friendly banter. I make money regardless of what you choose to do in your life. I'm okay with a little friendly banter. Hopefully you are too. I do not mean to offend anybody, but I also believe offense is taken, not given. I like being an optimist, and I think it's better off if a lot of newer traders would be more optimistic on the markets, especially since we know they trend higher. I think people falling into the bear side, or a lot of people, social media has a very good way of giving you what you want to see. So if you have a bearish bias, then you're going to gravitate more towards those people that have that same bias, that same mindset as you. Water attracts water and all that jazz. But I would much rather people, at least, maybe not for Bitcoin. Maybe Bitcoin is a Ponzi. Who knows, right? Bitcoin is the most risky asset class on the planet. But for the risk markets, S&P, stocks, we know those things generally trend up. So to always be pessimistic, thinking the world is going to end, the market's going to crash, what just happened? I just got triggered on that stop, but the chart isn't moving. Let's go look at gold over here. The chart quit moving. Oh, that's why right there. Let me put on that VWAP. Where is the open? 1800 right there. Oh, that's so stupid. It won't give me the anchored volume weighted average price because it's forex.com. They hide their data. They hide their volume from everybody. I don't know why they do that, but they do that. Let's go look at XAU on Oanda. They don't hide their volume. It's the same time, 1800 hours. Right there. Boom. So I took the short at, excuse me, I got filled at 9:35 a.m. That's this candle right here. I moved my stop to better than break even, and this candle poked up there and got me. But that's all right. We booked $25 on that trade, so that just gets added to the other $250 that we already made on it. We're doing good. We're doing good. Bitcoin's still just doing nothing. We'll go back to Bitcoin, because if gold's going to break out to the upside, then Bitcoin might break down. And we're going on now. What's going on? I got 2 people talking to me in the Discord, but I didn't get an alert. Oh, Nick, what time? It was 8:30, my man. NFP came out at 8:30. Yeah. Been live since then. Thanks for your time and thoughts. Interesting times are around the corner. Yep. I remember you when you were in Jordan's Discord. A lot of good information. Thank you for the live stream. Yep. Yep. I used to be in Jordan's. I liked a lot of the stuff Jordan was saying back in them days. Jordan has decent analysis. Jordan is a profitable trader as far as I know. He's got algos and all kinds of stuff now. Now I don't even think they are discretionary anymore. I'm not sure. They might be. We don't communicate. Every now and then we'll speak on a tweet, but that's about it. Yeah, fair enough. Have a great weekend. YouTube Buster. What leverage did you use on gold to make $100? Consti, I don't set the leverage on the futures. I was trading on the micro futures contract. The way that it works is they set the leverage. It's an American broker. It's on tastytrade. You just got to get approval to trade options. So we can Google it. No, we can't. I think it takes about $2,500 worth of margin to trade a macro gold contract. So for one contract, you need at least $2,500 of margin. That's long or short. That's for both directions on Tasty. And I don't know how much. Let's ask Google how much money per tick. I'm pretty sure it's $2 a tick on micro gold Utes. Yeah. It's $1. So each tick, and remember on the micro gold futures, tick is every 10 cents. So every 10 cents that this moves. So right there, that was like a 4-tick move. So that would have been $4, right? So it's $1 per tick, and it requires, so you can do the math. If you make $1 a tick, how many ticks did I make here? Quite a bit. There's 10 ticks per point. That's a 27-point move. That's 270 ticks. So we made $270 minus fees. Yeah, about $250, right? Hopefully that answers your question. So if you want to trade micro, you won't have nowhere near enough to trade regular gold futures. Regular gold futures holds much more than that in margin to hold a position. Much more than $2,500. It's probably $25,000. I could go see, but I just exited my main account. So because it had a mess up on me and I never logged back in. But if you want, you can follow me on Twitter or on X, trade_talk_. Hit me up in the DMs and ask me, and I'll tell you what the margin is to hold a full-size gold futures contract. But if you're a new trader, you should definitely be trading with micros, because this was in a single day. Like, if you can make or lose $250 that fast, I entered up here, and it was from 8 o'clock in the morning to 9 o'clock in the morning. A 1 hour's time, this thing moved 250 points. Now, it won't do that all year, clearly. The reason it's moving so much is because of how volatile it is. The reason it's so volatile is because it's broken out above all-time highs and was super, ooper, duper bullish. But it's right back down. Oh, no, I can't keep looking at that chart. That chart is frozen. I have to look at this. Yeah, it's sideways. Bitcoin broke out. Okay, so your opening range break on Bitcoin is up. But here's the thing. I don't really care about the opening range breakout strategy. I don't trade it. I want to see how Bitcoin reacts upon taking out yesterday's high, because we're already trading above last week's high. We know that. We're trading above last week's high, so it's not really a short. However, with that being said, if we liquidate yesterday's high and then have a pretty massive bearish reaction there, then I will go ahead and put on a little bit of short risk, knowing that we're also at a very, very important resistance level for Bitcoin. Just like we are on S&Ps, we are also at that resistance on Bitcoin. From the fib, right? From yearly high to yearly low, you are testing just above the 618 retracement. So we know bears, any bears that are looking for this to be a dead cat bounce or a bear market bounce, whatever you want to call it, it's when prices are moving down and then they change, start heading up. That's a bear market bounce or whatever, dead cat bounce. If the bears are in control of price, they should be coming in here any minute now. And then we can look at our liquidation map. Once again, we can go out. Well, I can't go out on this one. I have to go out on the first one. Let me go get the first one, and we can go look on a larger time frame here. We can go out a month, 3 months, and see where the liquidity is, the majority of the liquidity. Let me stretch it out. Let me make sure you can see that. You can. Perfect. There's still quite a bit of upside liquidity here. So here's your liquidity meter. Yellow means much liquidity. Purple means thin or no liquidity. You can clearly see how there is much more liquidity on the upside, all the way up to and around 101K, than there is to the downside. It's much thinner down here. But this looks very bullish to me. The liquidity is higher. So it might maybe want to liquidate the bottom side liquidity. Maybe. There's not much bottom side liquidity down here. There's a little bit. I would call that blue. Blue is all the way down here. So not much liquidity down here. But looking at this, the 1 month chart, there's not much liquidity to the upside either. Actually, looking at the 1 month chart, or this indicator, I should say, there's actually more liquidity to the downside than there are to the upside. It looks like 99,379 is about where the top edge of that liquidity would be. But I don't think if the bears are going to take control of this price action, they're not going to wait for 99K. They already do not like the fact that it's bullish on the year. That is enough right there to cause them to not. And I'm not talking about retail shorts. I'm talking about big money shorts. Your money managers, your trend traders, those guys. They don't like really shorting bull markets either. When we had all the uncertainty, we seen what Bitcoin did. So if we're closing dailies up in this area, one could argue that the uncertainty has left the building, and it's uncertainty that drives most of your sell side price action. Normal, natural sellers, people closing positions, not short traders. Short traders do not move the market. People closing positions moves the market. This is people exiting Bitcoin, literally rotating that capital into gold. So we need to see gold, in my opinion, come off more. And then that would give Bitcoin enough rotation capital, or let's call it potential rotated capital, to potentially give us another boost up. We know Michael Saylor's been buying this thing hand over fist too, but he does that in a way that doesn't affect market pricing. Dark pool liquidity, if you will. But it is doing okay, so we'll watch it. That's where I will end the stream as well. If we get up here, if it fails to get up there, then we'll end the stream. But this is where I'm going to be interested to see what Bitcoin does. My positioning currently, if you're just joining us on Bitcoin, is long. I am long from down here. I have already taken almost $1,000 of profits off the trade, and I'm still holding about half of that on the trade. I'm kind of looking for upside continuation. I'm not looking to throw on a new short here at Friday's high unless we liquidate that and then get a big rejection. And we will see that if that happens here, because the candles going up will be smaller than the candles going back down, if that makes any sense. That will basically say, well, yeah, it looks like the sellers are hitting this, and they're hitting it hard, taking profits and new shorts jumping on. I'm not interested in a short down here. I know retail, a lot of day traders would be, but they're probably stopped out at this point. I have a bullish bias on Bitcoin, and I don't like to trade against my bias, long-term or near-term. So I would be interested in shorting Bitcoin up here, 97.5. That's also a big figure, 97.5. Good round number to take profits. I know 97.5 isn't an even number, but it's a round number. Every $500, basically. We'll see. This is, like I said, that's that weekly open from a long time ago. I don't understand the significance of that price here. I don't understand it. We have traded through this price many, many, many times. I don't see the significance of the level. This would be an old support zone. But once again, the support has been traded through many times. I don't understand the significance there. It's not at a round off number. It's just a random price point. But for whatever reason, people are making moves here. They are making moves here. And that's where I want to put on my risk, in areas that I know will make people do things. Bitcoin volume peaked 5 minutes ago. Nice. Tesla analysis was fired. Thank you. That's impressive. Thanks for the detailed answer. I'm not familiar with options and futures trading as I'm new. Follow you from now. Thank you. I appreciate it. Let me make sure I haven't missed any other questions as we wait for Bitcoin to get up there and liquidate Friday's high. Because I'm long and I will continue to hold that long if we continue to make higher highs and higher lows on an intraday basis. I will see no point in taking that short. But we're about to do that right now. I just want to make sure I didn't miss anybody's question. How long did it take you to get consistently profitable and confident at trading? Years. I was a failing trader for years, not months. Years. See, I'm the kind of person that you have to beat up to get it. My dad wasn't a trader or nothing like that. I didn't have any mentors or anything. If I would have had people to be able to slap me around a little bit, which is what I kind of do to my audience. You know, I don't physically slap them around, but sometimes the tone of my voice will slap you around a little bit. It's because I want you to I don't want you to go through what I went through. I was always like every paycheck taking money out of my check and depositing on Forex exchange or taking money out of my check and buying more Tether so I could trade Bitcoin. I don't want you guys to do that. I want you guys to do what I do and only make withdrawals. All right, so we literally did liquidate that, but we're not really getting anything spectacular. If we look at this on a 4-hour time frame, this chart looks very freaking constructive to me. I mean, very long consolidation period here at the yearly opening range. Nice expansion higher. Another period of consolidation. Now we're seeing that expansion break out higher. This is how bull markets work. So if it's going to continue to be bullish, it should just keep right on trucking for the rest of the day. Maybe pull back later on around, noon to 2 o'clock. Start to slow down and then trade sideways. But yeah, we'll see what it does here. And I don't have to rush to put a short on here. So I don't want to short now. I want to wait, give it time, see if the sellers are soaking up these higher buyers up here. So basically what I mean by that is if you shorted any time today, this was your stop loss, that makes you a willing buyer at a higher price. So if I'm a seller, if I want to sell my Bitcoin to you, I definitely want to sell it to those people who want to buy it higher, right? And if you have a stop loss up here, then you definitely want to buy it higher. So if people are selling into those buyers right now, we should see that reaction. We should see it in the candlesticks. We're not seeing that yet, but this can take time. This can take 10 minutes. It could take an hour. It could take 4 hours. We'll see what happens. If it stalls out here, then I won't like that so much, right? I'll think to myself, it does look like these higher buyers are getting soaked up by some big sell side liquidity. New sell side liquidity coming in right now. We're just not seeing it yet. But if we're going to run into a period of exhausted buyers, then yeah, I can jump in that short. Because I have, like I said, $2,941 of available capital to deploy. And with weeks, I can deploy that to the short side. Even though I have a long on. I know, it's crazy, right? You're probably going to wonder, how can you do that? Well, it's cross-separated margin. Cross-separated margin. I can literally throw on a short right here, right now. I just have to make sure that it's bigger than a $500 position size to make any difference. But I'm not really seeing that come in yet. So I do have. So I'm going to put on a 55% position size. That would be about $1,500. That will be 3 times as big as this, or at least 2 times as big as it. So if it does reject up here, then I can enter the short, and then the short trade will make more money than this long trade will lose as prices reject, if that makes sense. So if we do get a bear market rotation here, I will catch the top. And then if it stops me out next week or the week after down here, this trade will be in great shape. But we just got to give it a minute. Let me read all that. So we just got to give it a minute. This can take some time. But I have it locked in, ready to go. And this is what it'll look like at a market order amount. It's not that much. Oh, yeah, it is with the leverage. Sorry. Yeah, so I'm actually opening a $3,100 position size. So we're getting that reaction. It's not a big reaction, but it is a reaction. But we got to give it a little bit of time. There's that swing high. Right there. So let's see what this is, this stop, because I don't want to wait for that candle to get massive. So we can risk a couple $100 of this right here by going 97,638 stop, sell limit 97,390. We want to sell, we don't want a $3,000 position. Let's go with a 50. We'll open a short on a pullback. If we get filled, we'll get filled here. And then the stop will go in after I get filled at 97,631. That means I'm risking $241 at 20x leverage with about a $1,500 position size. If I get filled, like I said, Weeks has no problem filling me on entries on limit. But this is also a good way to limit that amount of risk. Instead of paying $30 to get in this trade, I would rather pay $5 to get in it. But I don't know if I'll get filled. So this doesn't look terrible yet, but it's not really what I want to see either. I want to see bullish breakout continuation. what are we doing on S&Ps? S&Ps are rejecting July 2024's high. So literally, right where I said that, this was a liquidation run right here, liquidating all these shorts that got in earlier. So if it is going to roll over, it should do it now. There's no reason for it to go back up to the top. So that's where I would want to put my risk. If it does roll back up to the top, then I'm no longer going to short it today because I took my chance and I only want to do it once. I want to conserve what profits I have here. I don't want to get rid of all this by keep trying to put on a short trade because the market is bullish. It's not bearish. We know this market is bullish. I've already made the case for it. So by taking a short here, we are literally doing a counter trend trade. And those usually do not work out, right? We know that going ahead into this. We know that. But I also kind of want to put on some risk for y'all. Let me just do that because I can afford it. I'll just throw it on market. And then you'll see me get stopped out and lose a couple $100 if it's going to remain bullish. We'll give this a second because this candle closed up. Let's go ahead. Let's take it here. Stop loss 97,646. It's a Friday. We can afford it. We had a really good week this week. We literally bottom ticked this thing. It would be harmonious if we top tick it on a Friday. Glorious. Yeah, we bottom ticked it right there. Beautiful. The reason that I took the short there, I didn't get long here and then here and then here and then I took one trade, one long at 10 o'clock. That's when we got the news. So I let 10 o'clock happen. I let the news come out and I hit the sell or the buy button. Boom. And that's where I got filled. Everybody was super bearish this day because of this 4-hour candle here. It looked nasty. But objectively, you closed above the yearly opening range. You came back in for a retest in this 4-hour period. That looks like a sell side entry, don't it? Yeah, it does. But this happened instead. And this is what we were expecting. That's why taking the short now isn't very smart, because this market is bullish. But we'll do it. Because no one's ever said that we were smart. We don't want them to start now. All right. You still have a lot to learn. What's up, traders? What's up, Oxum? Thanks, Heath. Any spots getting rejected? Yeah, I read that already. Amazing how you manage your trades. I still have much to learn. So much value. Thank you so much for valuable information you provide. You are more than welcome, Mala. If you're still here, if not, I apologize. Bitcoin dominance is tradable on Binance, bro. Okay, sweet. I didn't know that. I don't trade on Binance, so yeah, I wouldn't know that. But that's cool. That's good to know. I did not know that. Nice. All right, I'm reading. Thank you for your time and thoughts. Interesting times around the corner. Yeah, they are. All right. Starting to get liquidity now. Yeah, traders need tough love. Enough said. You're the best, brother. I mean, new traders, I think, would do better if they had a mentor that wouldn't tell them a bunch of bull crap and let them know when they're doing things that are wrong. What took me so much time to get it was simple. I kept doing the wrong things. I kept trying to call tops in bullish markets. I would miss, like, I would be looking at an hourly chart like this. I'd be like, oh, hell, this thing is freaking extended as hell. I'm going to short this. Then because I shorted here and then here and then here and then here and then here, I was down like 40% on the portfolio. So I did top ticket, but I didn't take profits here because I had already lost so much going up. So I get the move in my direction, not take profits, and then get stopped out 5 hours later. That's essentially how it went for me, and then vice versa to the downside. I would be trying to sell the bottom of a bear market down here. I missed all of this, so I got to buy it. You know what I mean? I got to buy it here, buy it here, buy it here, buy it here, buy it. Yeah, I fell through all that stuff. I would get mad at the market and tell myself the market is definitely going to turn around at this point. It has to. Why? Because I've lost a lot of money, damn it. That's not a good enough reason, and the market really doesn't care how much money you lost. It's self-control. Until you can learn that stuff, you just got to learn that stuff. Break away from that, all that bad stuff. That gives you a chance to learn a process. Analyze top down. What's your trend doing on the year objectively? You don't have to take my word for it. There's not a person on the face of the planet right now that can say, I am wrong. When I say Bitcoin is objectively bullish on the year, on the quarter, on the 6-month chart, on the month, on the week, on the day, no one can lie, or no one can say that I'm lying. It's true. He's right. If you analyze it like that, then you'll get the objective stuff out of the way. Then if you want to put some subjectivity into your trading, be my guest. Just make sure you're using these levels and only attempting your trade once per day, not many times per day. Once per day. If you're wrong the first time, then you're probably wrong later on the day also. Right? So basically what I mean by that is if I get stopped out here in the next 5 minutes, then I will probably get stopped out up here and up here and up here. You know what I'm saying? So there's no point in trying it again. I will lose the money on, you can't see what I'm talking about because I'm on the wrong chart. Basically, if I try to, like if I get stopped out here, right? If it makes a new fresh daily high, I'm getting stopped out. So there's no point for me to try it at 5,700 and then 5,720 and then 5,730. There's no point. This is the line in the sand for me. If the bears are going to do it, they're going to do it here because we're liquidating Friday's high. We've already liquidated Friday's high on the S&P 500, traded lower, and made a fresh daily high. So, I mean, the odds of me being on the right side of the market is very low. Probability-wise, this thing is trending higher. It's trending higher intraday. You're trading at the top of the daily range. There's your daily candle. You're trading at the top of it. This is not trending down. It is trending up. Trying to short this might not be the best scenario. Buying the open might have been the best scenario in hindsight. But you wouldn't even know to do that if you don't know where yesterday closed. Things that simple can help you become more profitable. Right? Just wait for it to get back above the open of the day before you look to be a buyer. Being a seller in a bullish trend is much more difficult. But since the S&P 500 is not bullish on the year yet, you're only bullish on the month. You're even below March's open. March's open is way up here. So the risk markets is structured much differently than Bitcoin is right now. So we could see more downside. I don't know what it's going to do. Well, I can tell you what it's about to do. It's about to stop me out. Look at Bitcoin. It's literally trading back above the level where, yeah, this don't look good. This don't look like sell side soaking up the higher buyers. Another thing with Bitcoin and crypto markets, a lot of people just love to buy Bitcoin. They just want to own Bitcoin because they see a lot of people on Twitter and on YouTube telling them to do so. Because if you own just zero point 0.1 Bitcoin, you can retire your whole family. Things like that will affect people, obviously, and it will cause people to buy things. I would never say that because how do I know 0.1 Bitcoin can retire you and your family? 0.1 Bitcoin is $10,000. That's not going to retire anybody. Bitcoin could go up 10x and your 10 grand would be worth 100 grand. That's not going to retire anybody. I guess if Bitcoin goes up another 100x from 100K, then yeah, maybe you'll make $1 million, right? But it would have to do that. So we're about to get stopped out. Let me put it back up there so you can see that. Nope, too late. I lost about $100. But I will show you that it's definitely stopped out. Wrong one. Right there. It came up, took us out. Lovely. It's, like I said, I'm not going to try to will this thing to go lower. I'm actually long. I want it to go higher. And if it rolls over and goes without me, guess what? I'm okay with that too. I can always look to short it another day. I don't have to short it today. And I will not try to short it again today. We tried, didn't work. So is there anything anybody else wants me to look at before we wrap this baby up, seeing how we tried and we got stopped? Can you look at Baba and Mara? Yeah. So I'd be careful with Baba right now because there is a lot of stuff going on inside the China economy, obviously, with Trump tariffs and all that. It looks like, though, people don't care. You are very bullish on the year. That's your yearly high all the way up there, though. And then this is going to be your yearly low all the way down there. So it definitely is more structured to the upside. Looks like you filled a gap here, and that's about it. You can technically fib that swing high to that swing low, but you're still bullish on the year. So taking a short on Baba is still going to be counter trend. Just because you're bullish on the year, that literally means you are trending up on the year, objectively. You did get a nice pullback on that yearly expansion, but it's all it was. It isn't bearish. You're not bearish on the year. But if you want to look at it as a bear market is anytime you're 20% off the all-time highs, okay, fair enough. That's probably a 20% drawdown. So you can call this a bear market bounce. Yeah, right there is your bear market territory. Right here. So this white line, which is Q4 2024's high, an objective price point, is your bear market on Baba. Oh, you're above that. You filled this gap here. There's another pretty sizable upside gap up there. But I mean, uncertainty is what drives south side in a lot of cases. I think I'm not a big China macro analyst, so I just know that they're struggling right now. I watch Business Insider, and I've been seeing a lot of warehouses close down, a lot of unemployed people over in China, a lot of angry people. So that's uncertainty for now. I don't necessarily want to be a buyer in a Chinese market when all that's going on. Now, this company, however, is not struggling as far as I know. I don't trade them very much, and I don't know anything about their balance sheet. I don't know how much debt they hold. They're profitable. I know that. It's a profitable company. It's a good company as far as I know. You're about to test the 618 fib, but you're no longer in a bear market. You're still bullish on the year. You did get above the 50 here, and this is where I would have wanted to see failure. on the RSI to tell me that the bears are back in control of momentum. If you look at the RSI like that, the 50 is what separates bearish momentum from bullish momentum. Then if you're above 50, you have the bulls are in control of momentum, right? And if it's below the 50, like it was through here, then the bears are in control of momentum. So over in here, and I'm not doing this in hindsight, you can ask anybody in here, this is how I trade, literally. I look for this stuff every day in the Discord and tell people what I'm looking to do. I would have been looking for a short on Baba on this day right here. 100%. Especially if we were trading under daily res. Not only were we trading under daily res, we got above it briefly and then got back under it. That would have been my trigger to jump in this short, because I would be looking for the breakdown on the RSI, right? Or you could trade supply on a retest, because this closure did give you that signal. You don't have to try to get in before the signal. You can wait for the signal, then find your supply zone or resistance zone and look for your bearish entry there. Looking for the cycle, the RSI cycle, not a bull market, bear market cycle. The RSI cycles too. It will cycle from oversold back to 50, back to or overbought back to 50 to overbought in a bull market. And in a bear market, it'll cycle from overbought to the 50 to the oversold. I would have shorted this looking for downside continuation now that the bears are in control of price. And it would have been a fabulous short. Now, profit target would have been much shallower than that. I would have went back in time, these several candles here, calculate their move in a sense, or just get a standard deviation from here to here and calculate that as profit target. So from here to here, like this, and then I enter my short trade at supply, my bearish target would have been 112.09, and I would have triggered on this day and got out on this day, the very next day. I always leave a small portion of the trade on to catch any continuation. I always take profits at least a spot, a preordained area on the chart, if you will. I always take profit. When that profit gets triggered, I take it. I've moved my stop to break even. Now all my risk is out of the market. I can no longer lose money on the trade. It is a risk-less trade as far as my money, and I made money on the trade. So those are all checks in the right boxes. Now, you still are risking money. You are risking unrealized P&L. But that's all it is. That's all you can lose, is that unrealized P&L. So like if Bitcoin rolls over, I can lose that unrealized $450 that I'm currently holding on Bitcoin. That's unrealized P&L. This is what I'm risking right now. That's all I'm risking. But I've already been paid that much. It's a win-win. And that's all I did. I figured out how to be win-win when I take risk and not lose all the time. And if you can hit that 50% of the time, you're going to be profitable. That's why I use this indicator and the 21 exponential moving average. Both of those things kind of give me my near-term bias, but they don't always work, obviously. I have taken many trades in my lifetime where I was expecting a breakdown or wait for the breakdown and then take it on this day here. And many times prices traded all the way back up to here. I am going to eat all that. I will have a preordained stop loss at one point somewhere in there. But generally speaking, I do okay. It's better than a 50-50 hit rate. You can back test all this. Like, it's beautiful. Right in here. This is what we call a bull trap. We know it's a bull trap. We got to wait, see if it's a bull trap, or do you get bullish continuation. Those yearly opening ranges are huge, man. They're very, very huge. They're effective. They can tell you a lot. They can tell you a lot. Right here is that trap I'm talking about. Right here. That is a bull trap. Look at what the RSI did here. So the bulls got really momentous here, but then just a couple days later, you broke back down under that yearly open, which you were in 2024, to be fair, and it was the 2023 yearly opening, but it's still going to be a big level to watch. You got above it, then you broke back under it. So any pullback under here, I'm looking for a short. That's my strategy. Where would I short? The highest daily close, resistance, right there. That's where I would have been looking for my risk. So when we got back under it, I wouldn't have been shorting it on this day because it just broke out, and it broke out bullishly. So I can't short it then. I must wait to get the signal. This is the signal. It broke back under, and it closed back under. That's the important part. So on this day here, any trade back up to daily res, which is here, would have been my short entry. Stop above the high of day. And then I would have gotten a profit target from this to here. Boom, boom. So probably would have been able to exit the trade on the open of this day. Right? For any downside continuation, leave a small piece on. That's how effective this indicator can be for you. Here's another bull trap. I don't even have to look at the candlesticks. I can just look at this indicator. And now I understand it is going back in hindsight. In this scenario, you did not get a trade. Why? Because in this scenario, you closed up here, set the trap, then the next day opened way up here, closed down here. Well, that's a lie. There's a bullish close right there, and you retested it to perfection. So you did get an entry there too. Yeah, I don't know. It is in hindsight, but if you just look at this stuff and then wait for this stuff to happen before you even approach putting risk in the market, you'll do better. You won't have a 100% hit rate, but if you get good at managing your risk and you can do a 50% hit rate using just the RSI and price on the daily time frame, you never have to look at an intraday chart. If you're at or around the 50, then you have a trade setup coming. Right now, we're trading away from the level and away from the 50. So this would be more of a bullish bias. Old daily res is there. Old support is here. So this would be a demand zone right there. Because this was such a big gap up. Any pullbacks to 119.64, as long as you do not close a daily candle back under 119.50, then you can buy this. Make sure your stop is roughly 117.47. So you're risking $2 to potentially make $4. $4 would be your profit target if you were to get an entry here. And the way to figure out if you're going to get an entry is if it does gap back down, you do not want to buy it while price is under your demand zone, because then you run the risk of this being a trap, a bullish trap. If you're closing back under, if you're trading back under this, I don't want it. But if it gets back above this, then I can buy it and risk this $2. Set my take profit up there at 124. That's one way to trade it. You could also watch old daily res, because we do know that resistance will sometimes act as support. But if you get too many lines on the chart, you're going to confuse yourself as to where you're even looking to put risk on. And that's what we don't want to do. We don't want to confuse ourselves. The less confusion we can have, the better we are at our hit rate will get much better, in other words. But that's Baba. What was your other one? Mara. I don't trade Mara that often unless I'm selling option premium. And the only reason is because Mara is generally always, it usually always has a lot of implied volatility. Let me just see where implied vol is today on Mara. Trade the table. No options for this symbol. You are full of crap, dude. You better give me them option prices. What is going on? Why is this thing froze up? Oh, it wants me to log back in. Of course it does. Of course it does. Of course it does. All right, let me hit SPX, and then I'll go back tomorrow. So over here on the premium, this isn't right. It hasn't caught up yet. It says IVR. It doesn't even tell me what the IVR is. This isn't right. It will catch up soon, I guess. I'm not dropping any frames, so I don't understand what the deal is. But generally, the way I look at it is if the implied volatility is over 50, then I'm not going to be a buyer of option premium. I want to be a seller. Because if price just goes sideways and you buy option premium, you could still lose money on a trade from theta decay. So I want to be a seller of time when it's like a very volatile asset class. So generally in a scenario like this, I would have to analyze it. Let me analyze it real quick. We're definitely still bearish on the year with Mara. That's not really something I want to see. Considering how MicroStrategy is bullish on the year, considering Bitcoin is bullish on the year. But if I think Mara will be bullish on the year, which I don't trade Mara very often because I know it can trade under its own merit. If they're not making money, that's not a good asset to own. It's a stock. I understand it's a Bitcoin miner, but it still is a company and it still does have shareholders and it still needs to make those shareholders happy. Right? So it still got to make money. Mara doesn't quite make money yet. So a lot of people trade Mara based on Bitcoin volatility. If I were going to assume Bitcoin's volatility is going to stay going down, in other words, price is going to keep climbing, then I would want to be a put seller on Mara and collect that premium on the put side. I still don't have any data. Let me go to SPX and see what in the heck is going on. There's my IV. Let me go back tomorrow. It's still not giving me any implied volatility for Mara, so I'm not quite sure what's going on. I got implied volatility on SPX. Let's see if it gives me implied volatility on Tesla. Yeah, it does. Right now, implied vol on Tesla is 72%. And that, generally, I want to be a put or a call seller with high implied volatility. Mara stays above 100 usually. I'm not sure why it's not giving me the implied volatility. I definitely know. I mean, it's showing me the expected move for next week's is $1.29. That's not a very big move. Not a very big move at all. That's got to be wrong. Something's wrong here. If that's true, then the IV just isn't very big right now. If the IV is not very big right now, what is the IV? It's not giving it to me anywhere. Let me break down a 30-day or 28-day expiration. Yeah, it's still not giving me nothing. I don't know what's wrong with that. But yeah, I generally am a put or a call seller on Mara. It stays in the range. You can see that it's still inside of March's range. You got to get above March's range open to just be back in February's range. So far, which we just opened this month. So, I mean, if you want to buy it, just because if Bitcoin keeps going up, it does not mean Mara will. It's just one of those things. I guess one could argue and say it is kind of still a little bit cheap at $14, considering where it was when the year opened. It was at $17. So if it is going to go back to the yearly opening range, which I don't know that it is, but if it does, then you made $3 on the trade, or $2.30, right? Well, actually, you made almost $2.50 on the trade. That's not a bad trade, but that means you can only risk $1.50 or $1.25 in order to make that. And I just don't know if there's any reason here to take it. You're right into resistance here. Q2 2023 swing high. I think we can get a more relevant near-term level here. We don't need that old. Let's just use last month's high, right? That's going to be resistance until you're above it. So April high. Oh, wait. Caps lock. April's high. So I don't necessarily want to be a put seller as long as we're into resistance, because I know we could drop $1.50 from this resistance. But if we get down here like 1437 and show the inability to close hourly candles back under this point, then maybe I would put on that $1.50 risk and in anticipation of it running back up to the yearly open. That's about all you can do, and that's up here. Technically, is this thing bullish? Technically, you did get bearish. You did get a retest of your 50, and it did hold. I would have been looking for entries either at support or at demand, because you did gap up. And you did retest demand, and that was it. So the bullish entry would have been yesterday at demand. It would have been a difficult trade to take. I'm not going to lie. So this is what it would have looked like yesterday. You would have broken down below your demand level, and you would have got right back above it. But look how clean this level is. You did get an absolute phenomenal wick down test of demand, and it did hold. But later on that day, you got really close to being back down there. So that would have spooked a lot of people into exiting that position. But if they didn't exit, if they held it, they're doing okay today. But there's another big resistance level up here. So, but right now, the bulls have the daily momentum. Right now, the bulls have it. That's about all I can say. The bulls have daily momentum, but you are at a very key level, just like we are on Bitcoin, just like we are on risk. Yeah, S&P's at the top edge of the expected move, at that July 2024 high. Big levels here. It's hard for me to be a buyer or a seller here. It's just a sit on your hands type of scenario right now. But you can clearly see that you're bullish on this. The bulls have the momentum on the daily time frame. They might not have the momentum yet on the weekly. They don't have the momentum yet on the weekly time frame. But today is the close. So this is going to set up a pretty interesting dynamic for us going into next week on the S&Ps. Whatever this weekly high ends up being, that is going to be a key level to watch next week for downside potential. If you're thinking that it's going to reverse based on weekly 50 rejection here, I generally don't set my trades up like that though, because in my opinion, the daily is you're already up. We expect those trends to continue until we're no longer bullish on the daily. But you could watch next week or last week's high next week. And if you get any kind of rejection or whatever there, maybe you could look for a short next week. But you're also going to get a weekly expected move next week. And wherever today closes, that's where this blue line will be next week. So your next week's range, you're going to have a Fed meeting. That's going to raise up and the VIX is still elevated. So we had a 150 point move this week for the expected range high. We might see, since we're still going lower on the VIX, we might see about 145 to 140 point expected move for next week. So we just have to wait for today's close, see where that is, see what the expected move is for next week, and then we can make a plan for next week. So let's not even worry about next week. It is interesting to watch because of where it is on the weekly, but like I said, I think the daily just does better. You got above this here. So on this day, we were not quite bullish yet last week. I mean, we were, because I bought it down here, right? I bought it ahead of time based on August 2024's low. That was support here. So I bought it when we tested it again. And I exited my trade when we traded up into the expected range high. But here I was interested in being a buyer again. I just needed a pullback. Notice when we got the pullback. We got it on Wednesday. That is also the low of this week. Now, I literally bought the low of the week on the S&P based on this signal. That closed on Thursday. And then we got bullish continuation Monday. Now, I wasn't wanting to be a buyer up here. I wanted to be a buyer close to the bottom edge of the expected range for bullish continuation. We did get a pullback on Wednesday, and it happened right before the news, which was absolutely phenomenal. That's when I hit the buy button on this. I hit the sell button on gold. I hit the buy button on Bitcoin. We go intraday here on Wednesday, hourly on gold. Right here. Hit the sell button at 10 o'clock on gold. But I bought GLD puts instead of trading gold because gold was chopping at the open, right? You were still getting these intraday movements. In fact, we didn't get our move until the next day. Here's GLD, Wednesday at 10 o'clock right here. Oh, right here. So this thing chopped sideways all day. It wasn't until the last hour of the day that it actually started to get us that move. But even then, the last hour of the day, we didn't take out the low of day for GLD. This was the low of day on GLD. You closed above it. But the next morning I woke up and it was down here. So clearly I closed that short out. That's a big move. On GLD, that's a 5-point move. When you're long puts on a 5-point move, that's a big trade. I'm a little over $500. But yeah, I mean, that indicator can get you kind of, at least it'll help you be patient. And being patient is what you have to learn as a new trader. If you can learn how to be patient, learn how to tell where you are in the year as far as trend wise, and look at that little one momentum oscillator. Use the 50 as your guide. Above the 50, you want to be bullish. Below the 50, you want to be bearish. We got we got a couple Forex trades this week also. Because of this. See here, We're just holding that 50, holding that 50. Then it puts in a bearish engulfing, and then the very next day puts in a bullish engulfing. So this is literally range bound, choppy, sideways. I call this piano keys when it's just trading literally sideways every day. It wasn't until this day that I was able to put my short on because we closed under here. Oh, I got short on an ascending trend rejection, right? That's an ascending trend line. That is an ascending wedge, usually looked at for bearish breakdown potential, but that isn't why I shorted it. Why I shorted it? Yearly opening range. So I got short in anticipation of a bearish engulfing. We got one. Profit target was literally down here. I was stopped out 2 days later because I moved my stop down into here. And this day took me out. But I was looking for downside continuation. I thought we were going to see downside continuation. We retested the supply candle right there. I thought for sure this day was going to open and dump. And it didn't. So I'm out the trade. But you can see how it is still kind of a signal. If it closes a daily above the 2025 yearly opening range, then I can look for pullbacks into the yearly opening range or be a buyer on a pullback to today's close or something like that. Old resistance down here. But it's still a bearish pattern. But I'm not a pattern trader. I want to trade in the direction of whoever has momentum. But this has not been a good signal, has it? For very many days. So it's up to you to identify when this is happening, that you might want to be more, you might want to wait until you have a better signal. And still, you're not going to have a great hit rate. You're not shooting for a great hit rate. You're shooting for 50%. Because if you always only risk 1 to make 2 and you do that, a 50% hit rate will make you very profitable consistently. The kiddos at school have fun, Nick. Tesla took out yesterday's close and bounced a few bucks. Yeah. Lost you for ages, Heath. I'm back now. Have time stability to do properly now. You and always be breath fresh air. Awesome. Glad you're back, Mateo. Thank you, my friend. All right, we're going to wrap this up because there's really nothing else for me to do today. Bitcoin is literally rolling over now, but I mean, I took my shot at it and it stopped me out. That's trading. I'm not going to force the issue. I can't force the issue. But this is where I was looking for the short, and now we're under it, and it's starting to get momentous. So this could get very dangerous pretty quick. So just keep that in mind. 97,550 is the level that we were watching. This does look like a stall out, and it does look like those sellers hit it hard. So basically, if it stays below this, I might take one more shot at it, but I doubt it. Because I know that it can bounce from here and make fresh daily highs again. This really means nothing. But you're probably seeing a similar move like that across the board. There it is on SPX. But look at this also. Gold, interestingly enough, is doing the same thing as Bitcoin is. That's odd. That's odd. So if Bitcoin and gold start selling off together, to me, like I'm talking about day after day after day here, not 5-minute candles, but if gold and Bitcoin start to sell off together, I would be hugely concerned about that, because right now you kind of have the capital flowing out of gold into Bitcoin. And so we kind of want to see them trade inversely to one another, not in the same direction as one another. If they start being correlated in the same direction and the S&P 500 is selling off, that could be extremely bearish for Bitcoin in the near term. because gold generally will sell off if the market's going to be in a bear market. It took a hit back in 08. If it's going to be something like that in the future, I don't think it is, because I'm an optimist, always an optimist. I stay an optimist. But if it does do something like that, then I could see gold and Bitcoin both selling off together. But anyways, I'll put a quick 10-15 minute outlook video up tomorrow on the channel. Hit the subscribe button if you haven't already, and look for that tomorrow evening-ish, or whenever you got 10 or 15 minutes to spare anytime next week, kind of talking about what I'm looking for moving forward. It will depend on how today closes, because then I'll have your expected move for next week. I'll have more data, and data is very important. You guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.